Yesterday, it surged for triple-digit gains, about 780%, and that pushed Chris Ruddy to become a billionaire. Now we're seeing...
I used to report with this guy
Did
when
you
he was
now?
at the Post. He's a billionaire, and I'm here with Alex.
Who were you again? Charlie?
Yeah, Charlie.
Uh-huh.
But we're seeing shares now up about 65% in trading. I mean, it's good to see things going up the second day in trading versus down.
Yeah, I don't know what's driving it. I'm not sure there's a valuation call here, but certainly people are like the story and are buying it.
Yeah.
More buyers and sellers.
Yeah, there you go.
Yep.
That's how you make a market. All right, entertainment stocks
Yes.
also on the move. Is that related here?
I mean, I'm wearing red, you're wearing red. We're seeing entertainment stocks falling today.
Okay.
We got Live Nation and Vivid Seat. They're both lower. This is after President Trump signed an executive order. He's trying to crack down on ticket scalping fees. He doesn't really he wants more transparency at all stages of the ticket purchasing process, and he doesn't really want any sort of convoluted situations for people who are looking to purchase tickets. We had our colleague Kayla Gardner writing this up on the terminal yesterday, but he's directed that the FTC work with the DOJ to ensure that competition laws are enforced in the concert and entertainment industry. But of course, this isn't great for Live Nation or Vivid Seat.
Yeah, it's interesting. I mean, those fees have been the bane of all concert goers' existence for seemingly forever. But you've got Live Nation that owns Ticketmaster, and they also own like pretty much most of the venues around the world.
And I want to say there was something that was going on with Taylor Swift like a while back when she was doing that whole tour where tickets were just surging to insane heights, and even she was like, we need to get this together. So
although one might say you're only going to pay what it demands, right? So like they're $3,000 because people are going to pay $3,000.
They're going to pay $3,000.
Tay-Tay. All right, wrapping it up here with PVH.
Yes, a name in the green. We're seeing PVH. It's the owner of Calvin Klein and Tommy Hilfiger, up for double-digit gains this morning, up about 15%. They're saying that they expect sales growth to be flat or slightly positive this year, and that's against what Wall Street had expected. They expected about half a point percentage decline there. Evercore is saying that some of the company's initiatives are starting to stabilize the business, but it is important to note that the stock is still down almost 40% this year.
All right, Nora, we really appreciate it. Thank you very much for all the updates on the stocks.
Can I just bring this headline to you across in the Bloomberg? Attorney General Pam Bondi asking for the death penalty for Luigi Mangione.
Oh, wow.
Of course, he's the suspect in the Midtown Manhattan shooting of the fatal shooting of the United Health Group executive.
Thank you for that, John Ticker. We appreciate you.
Thank you.
Really helpful.
Thanks for getting my name right.
Yeah, you bet. For more conversations like this, go ahead and listen to our Stock Movers podcast. Subscribe for 5-minute episodes and the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. As John was just talking about, you're looking at a market that's actually turning around, an unbelievable move. It's similar to what we saw yesterday. Also, the Nasdaq now up by 0.5%. Joining us is Henrietta Treyes, Managing Partner and Director of Economic Policy at Beta Partners. Henrietta, what the market seems to want to understand is if tomorrow is going to be a clearing event or the end of the beginning before the next phase here of turmoil.
Yeah, I mean, that's obviously the critical question. I see no indication that this is going to be a clearing event. I'll give you a couple reasons why. Number one, we know that today the president instructed almost 3 months ago the major federal trade agencies, USTR, Commerce, and Treasury, to provide him with about 15 or more different reports about different components of our trade landscape, trade relations with 20 different countries. Not a single one of those reports has been publicly released yet. So the background to justify the forthcoming tariffs is something that you would expect to see publicly released, formalized in a Federal Register update, or even discussed with the media in advance of a publication. Should be all laid out if this is going to be clear cut and ready to go tomorrow. So the disarray that we're seeing, the sort of knives out reporting we're seeing for Howard Lutnick at Commerce, and the general disarray and lack of cohesiveness from the White House around this suggests that while we're going to get a lot of tariffs announced tomorrow and implemented at midnight, there's still going to be a substantial amount of uncertainty. I'm especially concerned about India, additional Section 301 investigations, what it means to pull out of the Phase 1 trade deal with China or declare them in violation, and how that impacts the tariffs we'll see on China, and obviously Canada and Mexico, which is maybe the most discomforting of all the tariffs, especially to the auto manufacturers right now.
Henrietta, maybe it's just me, but I haven't heard a whole lot from the U.S. Congress, either house, about their views on trade policies and potential changes and potential tariffs. Is that unusual?
It's not unusual, but it is, certainly notable, and I think should be relatively embarrassing for a chamber that used to pride itself on having authority over, tax policy and trade policy, and has been ceding those controls to the White House since the 70s, if not before. However, I will say they are going to hold a vote as early as this evening on the IEEPA tariffs against Canada. And there are a number of Republicans in the Senate who are telegraphing that they're going to cross party lines and vote against the president's declaration of national emergency against Canada, including Senator Collins of Maine. I wouldn't be surprised if, obviously, Rand Paul, who's a co-sponsor of the legislation from Kentucky, will be there. Chuck Grassley. Obviously, the farm state senators are the most exposed here. We know that the USDA is already talking about another bailout for farmers as we head into a global transformation of trade that will hurt them substantially.
Do we get the sense that if there is short-term pain for U.S. companies, that the administration is going to help subsidize it, which is really what we saw with farmers back in the first Trump administration? And is that kind of what the tax bill will be, or is it going to be something more beefy?
No, the tax bill should not be considered subsidization because it's an extension of the status quo, and it's so expensive already, $4.6 trillion just to keep things where they are, that you should not expect additional subsidization or tax cuts for either businesses or individuals. That is a point-blank declaration from Senate staff that I speak with on Capitol Hill. I would go a little bit further and say the endeavor, they endeavor to cut the deficit by $1.5 trillion. My expectation is they ultimately come in at around $400 to $800 billion and more pay lip service to deficit reduction. But you cannot call it deficit reduction when you're simultaneously writing off a $4.6 trillion extension of the existing rates. So unless you consider, like many staffers do, the idea that providing certainty and permanency for individual tax rates constitutes stimulus, there will not be stimulus in this tax bill. So these tariffs are coming. They are tax hikes. There are not tax cuts coming.
Henrietta, can you explain the politics of this tariff thing here? I mean, the markets, stock market's down 9-10%. The dollar's trading lower. The markets just don't like the uncertainty, I guess, more than anything else. And the concern is it may slow down this economy, may push it into a recession, may cause some inflation. Historically, that's not been good politically. It's the economy, stupid. What's the political call here on behalf of President Trump and the administration?
The view from the White House is that they have a mandate. They have the House, the Senate, and the presidency. They won the swing states, and they have, successfully come back from a loss in 2020. So they are going as if this is something that all of America, and certainly their voters, are fully behind. The polls suggest that that's not the case. The lowest amount of support for President Trump comes on his tariff strategy. The American public is very aware that tariffs are not tax cuts, as the president has proclaimed, and they do not view tomorrow as Liberation Day. They view it as a scenario where we're going to see more tariffs and taxes, mostly because, of course, that is what is coming, and you can see it in the pull forward purchases at auto sectors, for example, or auto sales. So you have a pretty material disconnect between what the White House thinks it has a mandate for and what voters are suggesting they support. But on Capitol Hill, as you point out, the senators and the House members, the best that they can do, given President Trump's stranglehold on their voters and the incredible popularity that he shares, is that they have to go along with this now. And the best they can do is expect that the uncertainty is really the problem here. So once we get past tomorrow, you'll hear folks say 80% of the whole market downturn is because things are uncertain. It's much more likely that once we get past tomorrow, things will calm down. And then they're very optimistic that some of these tariffs on especially Canada and Mexico will start to come off over this summer in time for a turnaround going into the 2026 midterm elections, which is about 18 months away.
Is there any real data that points to the fact that that could happen?
Well, there's no real data on anything except for what's in Trump's mind on what could come and what might come off. But there is very real concrete data that I think keeps being ignored, which is that the president has imposed 20% tariffs on nearly $500 billion worth of goods coming in from China and 25% tariffs on all trade coming from Canada and Mexico on about 40% of imports. There's also an underreported narrative that I think we'll hear about in the coming months, which is that the disruption at the border is incredibly widespread and underappreciated because you have no one to go to at USTR that you can get recourse for if you want to, explain that you are USMCA compliant or seeking an exclusion. So there's these backlogs and confusion at the border taking place right now. The most concrete example would be when the president, via executive order, changed the de minimis rules and created such a logjam he had to pull it off. That's actually occurring at the border right now. It's being underreported, I think, in part because businesses are still trying to get exclusions and they're not able to speak with anybody, that they don't want to ruffle feathers in the anticipation of hopefully being able to get an audience in the months ahead.
All right, it's not just tariffs. At some point, Congress has got to fund the government and do all that kind of stuff. How should we think about the to-do list for Congress in the coming days and weeks?
There's so much there. Okay, so first things first, I would say the Senate budget that they're working on right now, I understand is going to include a $5 trillion hike to the debt ceiling. Now, that is an exorbitant figure. The last time we hiked the debt ceiling by any dollar figure, it was $1.2 trillion. So $5 trillion is shocking. This belies the reality that current policy baseline accounting for extending the existing tax rates is not free. It does matter to the Treasury. They do need a $5 trillion increase in the debt ceiling. And by the way, that's only to get through the 2026 midterms. That's not for Trump's full term, which is what I originally anticipated when I heard that number a month ago. So first things first, we have to deal with that. I expect it to be in the budget that we should see from the Senate as early as tonight. That'll come due in July. Secretary Bessent will give us an update on that in May. And then, as you point out, we do have a government funding bill that's going to be due September 30th. And I think that's where we're going to see the farmers bailout housed, aid to California wildfires. And depending on the scale and scope of this tax bill, it could be where you see an expansion of the child tax credit, an extension of the ACA subsidies. The reality is you need probably 10 to 20 Democratic votes in the Senate for any bill to keep the government open. And we all saw what happened to Minority Leader Schumer last go around. So I expect that September period to be really fraught with negotiations and a lot of tension, much of which we'll see play out as a result of the elections in Florida's 6th and 1st districts tonight. So that'll be a fascinating precursor to how this will all play out.
All right, Henrietta, thanks a lot. We really appreciate your analysis. Henrietta Triss, Managing Partner and Director of Economic Policy at Beta Partners, which then raises the question, too, when we talk about a clearing event with all that in store.
Yep.
How could anything be a clearing event?
Yeah, that's a great point. Yeah,
at this point.
Yep. So, I mean, you're going to have tomorrow some tariffs. Hopefully that will provide a little bit of clarity for some members of the marketplace.
Right. Also taking a look here at Federal Reserve Bank of Richmond President Tom Barkin saying that the tariffs could raise both inflation and unemployment, creating a big challenge for the central banks. He warns that tariffs could lead to a, quote, cage match between consumers and providers. Is that a wrestling thing or
I don't
WWE thing?
Yeah.
Cage match stuff? All right. Coming up, we got a lot lined up for you here, so stay with us. Lauren Gilbert, CEO of Wealthwise Financial, will be joining us on her outlooks for the market. Plus, Michael McKee, Bloomberg National Economics and Policy Correspondent, will be joining us on the latest data, JOLTS, as well as ISM Manufacturing. Then Tim Craighead, Bloomberg Intelligence, the top 10 companies to watch. Then the CEO of Rivian will also be joining us. This is Bloomberg. Happy Tuesday.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is the Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Right now, the major stock averages, they've turned around. We are higher in the S&P 500. The leaders in terms of the index points right now, Microsoft, that's up 1.6%. Tesla shares 5.6% higher. You have NVIDIA up 0.8%. Amazon is up 1.1%. And the laggards include Johnson & Johnson, 5% lower. Eli Lilly, that's down 1%. And Visa right now down 0.75%. Now, among the data we saw this morning, there was a massive uptick in the prices paid component in that ISM manufacturing survey. It was, in fact, the highest level in almost 3 years. Conservative media outlet Newsmax having its meme stock moment. You have shares. They've surged over 1,000% since the debut as a public company. They had the IPO yesterday. The Washington Post reporting tariffs to be announced tomorrow by President Trump will be 20%, and there will be few exceptions. Right now, the S&P 500, 24 points higher. That's a 0.4%, 5635 in the index. The Dow Jones Industrial Average is 70 points higher. Right now, the NASDAQ 100 up 139 points. That is up about 0.75%. The yields, they've come back in. The 2-year yield down 1 basis point, 387. The 10-year yield, that's still 4 basis points lower, 416, as we're still seeing a bid to treasuries. And just to recap the general news we told you a little earlier about, the U.S. Attorney General Pam Bondi has directed prosecutors to seek the death penalty for Luigi Mangione for the alleged murder of the United Healthcare executive Brian Thompson. This is according to an emailed statement from the Justice Department. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alex, Paul.
John Tucker, thank you so much. We appreciate that. Alex Steele and Paul Sweeney live here in our Bloomberg Interactive Broker studio. And we are also streaming live on YouTube, so head over to youtube.com. Search Bloomberg Podcast Live, and that's where you'll find us. Boy, a big turnaround in the markets, as John was just reporting. I blinked, and now the S&P's up 25 points here just in the last half hour or so with trading. Lorraine Gilbert joins us, CEO, Wealthwise Financial, via the Zoom thing from California. Lorraine, again, kind of a tough start to the market here this year. A lot of uncertainty out there, much of it coming from economic policy pronouncements from the White House. How are you kind of having this conversation about markets, opportunities, risk with your clients these days?
Right. Well, I'll tell you, there's a lot of pessimism from retail investors. People are concerned about what is going on and how is that going to affect companies and how is that going to affect the market. And with that, we've seen the markets being nervous as well, with a lot of uncertainty about tariffs and the impact of tariffs and the impact of policies, et cetera. So definitely pessimism. When we look at consumer sentiment, it has been low. And if we look at past troughs of consumer sentiment, though, we actually see that that's an inverse indicator, meaning as that goes negative, then really looking forward on the markets, there's a lot of positives in the market. So we actually see that as a buying signal as we see the trough getting lower and lower as far as consumer sentiment is concerned. So really talking to investors about looking at that and seeing that even though there is a lot of uncertainty, as long as we don't see it going into recession, we see recovery going forward. We also see April as being a pretty positive month. It's actually the most positive month in the market as far as months are concerned, if we look at returns. And then if we look at pension funds needing to rebalance now, we're looking at those pensions probably reinvesting quite a bit into technology stocks. So we think that that could be positive. And then even Trump's Liberation Day that's coming up could end up being a signal of, okay, now we know what things are, we know what things are going to look like, and now we can move forward as far as tariffs.
So it does seem to be, from your perspective then, Lorraine, that we could see that as a clearing event of sorts for certain investors and their mindset?
It could be, but it could be a little early. So we never really know where the low is going to be in any kind of trough. And we're certainly seeing somewhat of this trough, somewhat of a correction. So we don't know where the low is. But what I can tell you is 1 year out, when we've looked at those lows in the past since 2009, a year later, the average return has been 28%. So if we look out 30 days, 90 days, and a year out, we see some positive numbers. As long as we're not heading into recession, and our base case right now is no recession, and this is a correction.
Laureen, how does fixed income factor into your portfolio these days? Again, the 2 years, we're now down to 3.86, but still a much better yield than we've had over the last decade or so.
Yeah, so we, as far as fixed income is concerned, we are constructive on fixed income, keeping credit quality higher. We don't see the benefit of going out on credit in the high yield space. So keeping credit quality high and keeping duration medium. Because once again, with the volatility that we're seeing, with still some uncertainty as far as when those rate cuts are going to happen, we have to be careful as far as duration is concerned. But I will say we see most likely 3 rate cuts this year, which will be constructive for fixed income.
What about when we talk about sector-specific areas? I know you mentioned tech. Morgan Stanley mentioned it's time to take profits in industrials. Do you agree with that sentiment?
We actually like industrials at the moment, just as a more tactical trade. I think that's going to be an area of opportunity as we look at those tariffs. And so we could see some purchases there right now, just front loading as far as what's going to happen with tariffs, and more onboarding here in the United States as far as more manufacturing. So we like that as a shorter term investment. So,
Laureen, the Mag 7 have really led this market for the past couple of years, but this year some folks have been calling them the Lag 7. Can this equity market really truly work higher if tech's not leading it?
Well, I think the real momentum there for technology is still AI. And there's still quite a bit of spend in AI to happen. But, as we've been saying all along, who will really be the winners of the AI is still quite an unknown. So I think taking a diversified approach there, we still like semiconductors quite a bit. And when we look at semiconductors, taking a broad approach there, once again, not really knowing who is going to end up being the winners there. So buying a basket of equities in the semiconductor space. So while that's very cyclical in nature, we do see ongoing opportunities there. And once again, I think that's going to be the story as far as technology is AI.
All right, Laureen, thank you very much. We really appreciate it. Laureen Gilbert, CEO of HealthWise Financial, joining us for her outlook on the market. All right, this morning, a report came out stating the U.S. is planning to implement 20% tariffs on most imports during Trump's Liberation Day event tomorrow. Now, Bloomberg Surveillance, former Federal Reserve Vice Chair Rich Clarida was asked what will the Fed do in response to these 20% tariffs.
I think Jay Powell at the March meeting, at least to me, signaled they're happy to basically sit on the sidelines. I don't see them acting preemptively to cut rates because they may be worried about a downturn. And so what that means is that it will take tangible data of a slowdown in payrolls, maybe a big pop in unemployment. So I see the Fed on the sidelines until the macro data really turns.
That was former Fed Reserve Vice Chair Richard Clarida this morning on Bloomberg. Also, Thomas Barkin talking about the bond market pricing and more recession risk. Let's go to Michael McKee, Bloomberg International Economics and Policy Correspondent. What did you make of the data this morning? JOLTS and ISM manufacturing.
Well, JOLTS is kind of meaningless. I'll get to that in a second. But the ISM manufacturing is exactly what Rich is talking about. The data have turned. ISM was a disaster no matter how you look at it. Falls on the headline rate, but new orders, backlog of orders, all going in the wrong direction. Big drop in new orders. Employment falls to a 6-month low, and it looks like at this point manufacturing is hitting the skids. The question is that because people were putting the brakes on ahead of tariffs, or is it already a tariff effect? And the ISM report suggested it's a tariff effect from the tariffs that have already come on. We saw a big rise in prices paid to 69.4 from 62.4.
Yep.
And every comment from the people that were surveyed was it was because of tariffs, that prices have gone up because of Trump tariffs, and prices have gone up in Canada, if you sell into Canada, because of the tariffs that Canada has put on as a retaliation. I'll just measure the JOLTS numbers are basically confirming what we've seen in more contemporaneous data, like Indeed's job postings survey, and it's from February. So right now the question is, what's the impact going to be of tariffs? It's not a question of how many job openings there are. It's a question. Well, I guess you could say it's a question of how many job openings there may be in the future.
Exactly.
But it's not. It's not going to influence the Fed at all.
Well, here's a red headline. They just keep on coming. Mercedes weighs pulling U.S. entry-level cars over Trump tariffs. So there's a real company considering real retaliatory action.
Which is weird because you don't hear companies coming out and being very specific. They don't seem to want to push back very hard. So that headline, quite something. Mike, from an economic perspective, what are you going to be watching for tomorrow when we get the announcements? Is it the amount? Is it the country? Is it the product?
You're going to want to know, first off, the levels. And it'll be a lot easier if it is the 20% tariffs, because you just plug that into a model. If you have to do it country by country and product by product, it's going to take a lot longer to figure out what the effects are going to be. But the Wall Street economists are firing up their models, and they're ready to plug all that data in.
And since it's at 4 p.m. tomorrow, they'll have time until the market opens the next day.
Exactly. But you also want to know, obviously, when they're going to be implemented and how, if they're stretched out or if they're, all go in at once, or if it's a ratcheting up thing. But the levels is really going to be what will tell us the overall impact.
And we're hearing the R word more and more every single day. I don't know if it's just its own momentum, people talking about the possibility of recession, people taking the odds of recession higher. That's something the Fed pays attention to, doesn't it?
Definitely. And you look at data like we got today. I mean, we've had consumer confidence come down quite a bit. CEO confidence has come down. And then while the ISM data counts as soft data because it is a survey, it does suggest that there are real world effects that are happening, that companies are cutting back and orders are being cut. And so going forward, you have to look at the possibility that we're going to see people stop economic activity because they're afraid of what's going to happen.
Is that an S or an R word? Recession or stagflation?
It could be either. At this point, you'd have to say maybe stagflation more than a recession, but recession's always a possibility. Recessions, as I've said many times, are confidence things. And so if people lose confidence, then you can easily go into a longer term contraction, and then you get a recession.
I just look at the political risk here. Boy, they're on the high wire going this way.
But polling is still really positive
I mean, let's
on
see.
a broad level.
Well, it's starting to come down quite a bit, especially on his handling of the economy. He's down to 32%, I think it was.
I think Democrats are still lower, though.
Well, yes, but they've got to come up with a plan. I'm voting for Cory Booker because the man is still on the floor.
Is he?
He's still on the floor.
Well, he is an athlete.
He
was a football player.
So how long is it now?
Well, he started, I think, at 7 o'clock last night. The
That's
record
amazing.
is 24 hours and 18 minutes by Strom Thurmond, who was filibustering against the Civil Rights Act.
So we're not there yet.
We're not there yet.
All right.
Amazing. All right, Mike, thanks a lot. Really appreciate it. Michael McKeeb, International Economics and Policy Correspondent. Mike rivals you, John Tucker, on information.
Well, I noticed you got his name right.
I just said John Tucker. Oh,
Have you been getting Charlie's name wrong over there?
Yes.
Does
I'm
your
sorry.
husband know about this fascination with
With Charlie
Pellet?
Pellet? No, but now he does. All right, let's go to Tim Craighead, Bloomberg Intelligence Research Director for Content. They do great pieces where they put out like top 10 companies to watch, top 20 companies to watch for the quarter, for the month, for the year, and they're out with their 10 companies to watch for the second quarter. Tim, give me the broad scope here. What are you guys looking at?
So just as a reminder, these are all based off of focus ideas, which for us in Bloomberg Intelligence are high conviction, out of consensus views where we see catalysts ahead that can actually change the market's mindset around these companies. So I think, it probably makes sense to jump in on the idea of tariffs. Are there any of these 10 that coalesce around this hot topic? And there are. No big surprise. You've talked about the weight on consumer sentiment and things along those lines. Well, Dollarama, which is a dollar store up in Canada, has... Yeah, exactly. They're going to face slower wage growth, higher inflation. We've not seen estimate cuts yet for Dollarama like we've seen with Dollar Tree, dollar stores, and whatnot. We think that's coming. Another one that is interesting, if you want to throw on as well the whole tariff concept, is PDD. You might not have heard of this, but this is one of the big Chinese companies that tech companies that trades in New York. They own Temu, which is that ultra low priced e-commerce platform in the States. There's even, their bigger platform is one in China. They're going to have constraints on what they can bring in at the right price. And they're also investing pretty heavily outside the U.S. to grow their non-U.S. platform beyond China. So again, we think that there's estimate cuts there to come.
Hey, Tim, looking at this list, one of the more controversial calls, I think, is Tesla. Steve Mann, you're the analyst for Bloomberg Intelligence covering the auto business. He's pretty positive on Tesla here, despite the collapsing stock price and I guess the concern about Elon Musk and his focus.
Yeah, you could throw this in with tariffs, with policy, et cetera, and clearly it's taken a shellacking from a stock price perspective. We see two things going on here. Number one, there's been a lot of talk about how their sales have been disappointing as of late, and is that because of politics? We think, frankly, it's because of the model transition with the new Model Y coming out. Orders, even in China, have been good, and we would expect to see sales to pick up as we proceed through the second quarter and on into mid-year. You've also got a really underappreciated battery storage business that is also starting to ramp up. So we see two catalysts here to play out that people aren't focused on because of all the other noise.
And here's one for Paul here. Cracker Barrel.
Oh, yeah.
Is on your list. Again, I've never been.
See, now, Tim, while he lives in London...
How could you not go to Cracker Barrel?
I grew up in New York City, man. Like, I don't know what I'm going to do.
See, Tim grew up in Southwest Virginia. He knows about a biscuits
Barrel.
and gravy.
I mean, I'll eat it if you buy it and eat it. I mean, give it to me, I'll eat it. Let's put it that way. All right, talk to us about that.
It's really good.
I've heard.
Cracker Barrel falls into the restructuring, reorganization bucket. And there's another one on the list as well that actually may be good for you, Alex. I'll come back to. But Cracker Barrel, 3 years of estimate cuts. There's next to no buys on this stock. And from an underlying business perspective, they've made some wholesale revamps. The menu, their approach to service, they're remodeling stores, and we think that there's an inflection to come from the standpoint of earnings trends. Notwithstanding the economy, this one's already been beaten down, and we think that there's an upside to come. Caring's the other one. Now, Caring, yeah, so again, 3 years of estimate cuts. Yep. You think, who is Caring? Well, their biggest label is Gucci. There you go, Alex.
I see.
And
I only shop discount, Tim. Let's be clear. But
yeah.
Go ahead.
So, new CEO at Gucci, a new head designer at Gucci. We think there's a rejuvenation at hand, and it's not in the estimates.
So, again, Tim, let's just step back a little bit. European markets really performed well, certainly relative to the U.S. market. What are your clients saying here?
So I think there are a couple of things coalescing, three, in fact. You take tariffs and all the concern that's going on. You take DeepSeek and that raising the specter of, gee, is there a different dynamic in the world of tech that's been driving U.S. markets and U.S. exceptionalism? And then you have a big European defense initiative and imperative with Germany coming out with what people around here are calling the bazooka. And you add these together, there's a growth idea developing in Europe. There's concern about what's going on in the U.S. And if you look at our economists, they see as much of a hit on U.S. growth and inflation as they see it anywhere outside of Mexico and Canada. So all of that weighs on the U.S. and Europe is an alternative. And obviously we've talked a lot about how it's valued relative to the States. I think that creates a money flow issue, a money flow opportunity, just like it does for China.
All right. Good stuff. We wanted to get your opinion there. Tim Craighead, thanks so much for joining us. Tim Craighead is a Global Chief Content Officer for Bloomberg Intelligence. He's based over there in London. Coming up, we're going to go to a simulcast with Bloomberg Television and talk about with the Rivian CEO, talk about the electric vehicle business. I'm just reading an article from Bloomberg about how people have, in fact, been buying cars over the last several weeks, getting ahead of these tariffs here, and that's certainly a real thing. It wasn't a factor in my purchase decision, but in hindsight, it was probably pretty good timing. Roundtable conversation, BTV anchor Caroline Height speaks with Rivian CEO RJ Scaringe and Eclipse Ventures partner Jiten Bell. They're going to talk about the future of the EV business. That's coming up right now. Let's take a listen.
We welcome our global radio and TV audiences now. EV maker Rivian recently announcing it will be spinning out a new company called Also, with the aim to develop EVs for short trips. $105 million funding from Rivian and VC firm Eclipse. For more, I'm very pleased to say we're welcoming Eclipse partner Jiten Bell and Rivian CEO RJ Scaringe. Great to have you both here. And RJ, I start with you. The spin out of Also now. Why is it better now to let it thrive in a solo manner?
Yeah, well, thanks for having us on. Yeah, as we think about overall transportation space and what needs to happen, of course, there's electrification of the vehicles and the infrastructure that we know of today, and that's what Rivian's been focused on, of course, first the United States, and with our R2 program, soon Europe. But there's a lot of trips and a lot of miles that are much shorter distance and actually work better with something that's a much smaller form factor. And so we kicked off a skunkworks team a few years ago to look at how we could take our core technology stack and apply it in a very low cost, much smaller form factor. And as that played out, we realized that the idea was really had a lot of legs. It was a powerful idea, and we decided that this idea was big enough to deserve being its own business. And so we took the decision to spin it out. Eclipse led the financing of that with a $105 million investment, as you said. And we're really excited about what's to come. We haven't shown any of the products yet, but they're absolutely incredible.
Let's therefore ask Jiten, how is this relationship going to evolve? What's the sort of closeness you're going to be doing? Because RJ is going to be on the board.
Yes, I think it's exciting because I spent many years at Rivian working closely with RJ, and now in this new role at Eclipse, really excited to invest in this opportunity and really disrupt the micromobility space. So yeah, I'm really excited to partner again with RJ and the Rivian team, as well as the Also team to bring this vision to life.
Jiten, I ask you the consumer issues here, though. We're a little bit worried, to say the least, about the economy here in the US. Do you think that the consumer is going to be there to back this more than $100 million that you're putting behind this offering that starts to get into our hands in 2026?
Yeah, absolutely. I think if you look at the transportation ecosystem around the world, it's under so much of stress when it comes to infrastructure limitations, when it comes to congestion, comes to pollution. And micromobility is a very important piece of that puzzle. More cars, more buses, more trains. is not going to be the answer. You need something smaller, something more flexible to complement those other modalities. And we believe that micromobility is a perfect solution to that. It's a large market already. It's growing very rapidly around the world. But if you look at the solutions, they're very weak technically, very poor user experience. They lack reliability. And this is where the opportunity is. And I think the consumer is waiting for something more compelling to hit the market.
Ajay, it's a global opportunity on micromobility, and you just talked about how it's a global opportunity for you right now with Rivian and the R2 rollout. This is a difficult time to be a global business. How are you preparing yourself to access the European market when we're worrying about tariffs? And you've always set aside hundreds of millions of dollars in potential policy impacts.
Yeah, it's as you know, it's a very complex environment. And as Rivian, we're spending a lot of time interpreting and understanding what the tariff implications are for us, of course, here in the United States, but I think importantly recognizing that, in particular, Europe may respond. And so how ultimately the tariff structure sets out and lays out is going to have a big impact on some of the decisions we make over the next year. We're staying very, very close to it, but it's, as you've called out, it's a very dynamic situation. And I think some of the uncertainty is what makes it the most challenging to navigate.
Ajay, are you in close discussions with the administration itself? Have you been getting a glean on what they're thinking of for the future?
Well, I think, one of the things that's important, just if we take a big step back from all the noise of what's happening, what's going to happen tomorrow with some of the tariffs that have been talked about and will be rolled out. I think big step back is there's a clear directive to drive technology and manufacturing into the United States. And for Rivian, we're a U.S. company. We have just under 17,000 employees here in the U.S. We have a plant in Chicago, or just south of Chicago in Normal, Illinois. We're building another plant in Georgia. And so we're growing rapidly here in the United States. 100% of our vehicles today are produced here, and all of our technology is here. So in terms of the administration's objectives, we're very aligned with what's being asked and what I think the overall policy framework is trying to drive towards. But in terms of how that translates to our expansion in Europe and elsewhere, we do have to recognize that it's a very dynamic environment. Our production footprint may be different than what we were originally planning. But I think all of us, across all the different auto manufacturers are waiting to see how things look once the dust settles.
And that uncertainty, Jiten, I'm sure is affecting you as a team of operators, investors. How are your other founders coping with this moment?
Yeah, I think uncertainty is the key word here. I feel that what is in our control is to focus on two things. Making sure that founders building in the physical industries have the maximum control on the stack, on what they design, what they engineer. If you have control over it, then you're able to make decisions to optimize around different environments. And the second thing is to build that resilience and flexibility in the supply chain so that it is able to navigate, again, short-term, medium-term, and long-term changes in the policy environment. So I think the key word there for our founders is control the controllables. There are things that are going to change, things are going to change back. I think what is most important is to build a resilient strategy and a supply chain network within the company that can navigate all these different environments.
Ajay, a quick 30-second one for you. Do you think you've benefited from people moving away from Tesla for political reasons?
Well, one of the things that I think is often missed as we think about electrification is today only about 8% of new vehicle sales are electric here in the United States. And so when we think about competition and growing our market share, the biggest opportunity is bringing people into our new technology vehicles and introducing people into what it feels like to be in a connected, smart, of course, electric vehicle. And so we really believe there needs to be a lot of choice in order for us to go from 8% to 50% to eventually 100%. We need lots of successful companies. We need Tesla to be successful. We continue to be very successful. We need Rivian to be successful. We need the existing legacy manufacturers to be successful. And so with our R2 program, it's a much lower price vehicle. It's really cool. It's an incredible product. But what that'll do is it'll give customers another choice. And so we think the presence of another choice is going to be important from a brand and product attributes point of view.
Thank you both so much for your clarity of thought today when there is not much clarity in the economy. Jiten Bell of Eclipse, RJ Scaringe of Rivian.
You've been listening to a Bloomberg TV anchor, Caroline Hyde, speaking with Rivian CEO and Eclipse Ventures partner, joining them as well on the conversation. Let's get you caught up here with the markets. You're looking at the S&P just up by 0.4%. Here with your Bloomberg Business Flash is John Tucker.
Thank you very much, Alex. This Bloomberg Business Flash being brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. The major stock averages, they have turned around from this morning. Best performing stock in the S&P 500, that belongs to Tesla. Tesla shares up 6.3%. That's still down about 42% from its December peak, though. With tariffs looming, the ISM factory index signaled contraction for the month of March. Prices accelerated. And then you had U.S. job openings, the JOLTS survey, down again, falling to roughly 7.6 million for the month of February. That's the lowest since last November. Meantime, Gregory Dacko, chief economist at Ernst & Young, sees tariff uncertainty as an economic drag.
There's tremendous uncertainty, the highest uncertainty in these projections from Fed policymakers since COVID, and the risks are to the upside for inflation and downside for growth.
The S&P 500, 19 points higher. That's up 0.3%, 5631 on the index. The Dow up 33 points, and the Nasdaq 100 right now is up 118 points. And just to recap that headline that we brought you earlier, Mercedes-Benz considering withdrawing its least expensive cars from the United States because of the auto tariffs would likely make their sales economically unfeasible. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele and Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Let's stay on the topic of global autos. Steve Mann joins us, Global Autos and Industrials Research Analyst for Bloomberg Intelligence. Steve, what are you telling clients about the impact we may see tomorrow from President Trump and tariffs on the global auto business?
I've been telling clients that I think we're pretty much done for auto tariffs for now. I think the big thing that's going to come up next is really on how parts are going to be taxed going forward. And you know, it's a big chunk. We had a report out there today. You know, Tesla, even though they make a lot of cars here, but about a third of their parts actually are imported from elsewhere, mainly low-cost country like Mexico. And hence, surprisingly, Ford Motor Company does build a lot of companies here, a lot of cars here in the U.S., but they only have some 30% content that's actually based in the U.S. So lots to come on the auto parts section of the tariffs.
Yeah, so let's just understand that a little bit more. So you have the actual whole imported car versus the car part. And the whole imported car stuff should happen tomorrow or Thursday, whereas the car part is a May thing. Am I getting that relatively correct?
Yeah, that's right. It could be really huge. For example, I was just talking about Ford, right? Anything that comes in from Mexico, for example, the Mach-E, which they're losing tons of money on already, comes from Mexico. And then, you know, if on top of that, the parts are actually coming from Mexico or any other low-cost country, that could actually lift the price of the vehicle even higher.
So are the U.S. automakers, is this going to benefit them? And if so, how and to what degree? I'm unclear here.
Well, I mean, it's philosophical. There's, I think, debate on both sides. You know, automobiles are high-value products. There's no argument against that. And, you know, the design of the vehicle, the production of the vehicle, the manufacturing of the vehicles creates a lot of jobs in the U.S. In the manufacturing alone, if I'm, you know, quoting some economists, every job that manufacturing creates. It creates another 0.4 jobs, peripheral jobs for that, to support that manufacturing. So it does create a lot of jobs. It does create a lot of innovation. Example, we just had Rivian on. A lot of these pure plays like Rivian, Tesla, they make a lot of the high value components in-house and in the US already. And that has created a lot of innovation around cars and around how to make cars in a cheap way, less expensive way. I think there's debate, right? A lot of the legacy automakers have, outsourced that manufacturing to low-cost country. And maybe that's why they're facing a lot of the competition around the world where they can't really build cheap cars cheaply to the masses.
Is it possible that some of the winners are actually going to be other foreign companies? Like we were talking about, Paul just leased a hybrid that was built either in Ohio or where was it? Virginia?
Somewhere
south.
U.S. based.
U.S. based. So, but it's a Honda. You can make the same argument for Toyota. Like, are those cars actually going to be the bigger winners here?
It could be. Japanese, if you look at potentially increasing prices for consumer, from an automaker's perspective, I think the Japanese are in a better position because there's still a lot of demand for their vehicles. Their inventory is relatively low, around 30 days to 40 days of sales, versus the average industry is like 70 days up, and some automakers are over 100 days. So in terms of pricing, I think the consumers will be willing to pay a little bit extra. And so Honda and, examples of Honda and Toyota may be able to get the consumers to absorb some of the higher tariff costs.
Have we heard any U.S. auto manufacturer announce plans for new factories, or they're going to add jobs? What have we heard from the U.S. manufacturers?
Not yet. Not yet. I think there's a lot of discussion on, can we, with Trump about not taxing parts, certain parts, auto parts, but we haven't heard of reshoring. But, we've also had a lot of analysis. We've done a lot of analysis on reshoring. It's going to be a huge cash flow headwind for the automakers. If the automaker have to build a greenfield plant back in the U.S., that could cost upwards of $4 billion just for one plant. So that's humongous. So we haven't heard. I think the automakers are hoping that these tariffs don't last forever. But I'm sure in the boardrooms they're thinking about the contingencies around how to manage that capex, and probably asking the administration for financial support if they do have to bring back a lot of that manufacturing into the U.S.
All right, we really appreciate it, Steve. Thanks so much. Steve Mann, Bloomberg Intelligence Senior Autos Analyst, which brings us to sort of all the carrots that can be offered. And if we get the depreciation thing that we had in the TGCA and the Jobs and Tax Act before in the first Trump administration, anything that you spend in 1 year can be deducted. Does that actually then help and spur, like an auto company, for example, to actually put billions of dollars into the ground? TBD. I think they have to get that passed. All right, happy Tuesday. We made it to the end of the day. We will see. We're on Tariff Watch, 4 p.m. tomorrow. President Trump will be announcing tariffs. Balance of Power with Joe Matthew is up next after this global news update.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. Federal prosecutors have been told to seek the death penalty in the much-talked-about killing of the United Healthcare CEO last year. CBS's Chanel Call.
Coming from Attorney General Pamela Bondi's office, it says, quote, Luigi Mangioni's murder of Brian Thompson, an innocent man and father of 2 young children, was a premeditated, cold-blooded assassination.
A record-shattering $90 million has been spent on the Wisconsin State Supreme Court race that's being decided by voters today. Marquette University professor Chad Oldfather.
This is such a key state. If you believe that this court might change the congressional maps in this state, which might have the effect of altering the balance of the House of Representatives, then yeah, it could matter.
Political analysts expect Democratic candidates to make a stronger showing in 2 Florida red congressional districts holding special elections today. CBS News Miami's Jim DeFeeti.
If you bleed 20 points in just 5 months in that race, that could translate into losing 30, 40, 50 congressional seats in the midterm elections in 26.
Suspense building as President Trump readies to make his announcement tomorrow on tariffs. CBS's Weijia Jiang.
Just 1 day away from the announcement, the White House has yet to share exact figures or a list of impacted nations. Mike Elmendorf, who heads the Associated General Contractors of New York, says the lack of information is causing harm.
It is the uncertainty of how this policy has been rolled out or rolled back, communicated, that has already created an environment in which we're seeing the cost of these materials go up today.
That could impact every construction project, he says.
Last week, it was announced some 10,000 workers at the Department of Health and Human Services would lose their jobs. CBS's Alexander Tin says individuals are getting word today.
Notices began to be mailed out to thousands of workers at public health agencies throughout the Department of Health and Human Services, notifying them that they would be laid off as part of Secretary Robert F. Kennedy Jr.'s restructuring of the department.
Evacuations have been ordered as a precaution near an erupting volcano in Iceland. Ricky Peterson is one of the experts watching it.
It's close to town, but it's a more calm eruption than the previous few we've seen.
Reports say NFL owners have tabled a vote on a proposal to ban the tush push, short yardage play, to have further discussions on it. Wall Street, right now the Dow is up 100 points. The S&P is up 31. This is CBS News. Defense Secretary Hegseth has ordered the military to adopt the same fitness standards for men and women serving in combat roles. The move is likely to reduce the number of women who meet the requirements. Some familiar names are on a big money list.
Forbes has published its annual rich list, and Elon Musk stays on top with an estimated net worth of $342 billion. Trailing in second with just $216 billion is Facebook founder Mark Zuckerberg. 8 of the top 10 are American. French fashion and retail king Bernard Arnault comes in 5th. Spain's clothing retailer Amancio Ortega is 9th. Elaine Cobb, CBS News.
All-star outfielder Jurickson Profar stands to lose nearly half his $12 million salary. The Atlanta Star has been suspended for 80 games without pay for using performance-enhancing drugs. I'm Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Washington, D.C.
It's like Christmas Eve at the White House. We still don't know what's under the tree. Welcome to the fastest show in politics. On this day before President Trump makes it official, announcing tariffs on most imports to the U.S. Liberation Day, as he calls it. The Rose Garden is being dolled up as we speak, and we'll be joined ahead by Bloomberg's Laura Davison with more on what to expect. This as Congress prepares for some critical votes this week. Coming days will set the stage for reconciliation. We'll get into that and a lot more with Nathan Dean at Bloomberg Intelligence. And as the administration deports another plane load of detainees, migrants to El Salvador, we're going to talk about the politics behind the deportations, which could be challenging the narrative at the White House. Our signature panel weighs in with Rick Davis and Jeannie Shanzano. On this day before the tariffs take effect, we start, as always, on Wall Street. Charlie Pellet has that for us with his view on the markets. Charlie?
And good day from New York. Joe Matthew, just over 24 hours to go until that formal tariff announcement. Never too early to start beating the promo drum, because we got you covered live on Bloomberg Television and Radio, 4 p.m. when it all comes down. And indeed, we got special coverage tonight on Balance of Power. Ahead of that, with a special tariff program tonight here on Bloomberg Radio. S&P right now advancing. Earlier losses have declined. Right now we are looking at a 30-point gain, up 0.5%, 56.41. We've got the Dow up 101, up 0.2%. NASDAQ right now up by 1%, and the 10-year 4.15%, with the 2-year right now 3.86%. Spot gold moving lower, down 0.5%, 31.09 the ounce. West Texas Intermediate crude retreating today, down 0.1%, 71.38 a barrel. And Bitcoin now surging 3.4%, 85,244. We are seeing a rally in the world's largest tech companies. That is helping lift stocks. Federal Reserve Bank of Richmond President Tom Barkin says President Trump's tariffs could raise both inflation and unemployment, creating a big challenge for the central bank. Tomorrow, that big Rose Garden event. Again, we'll have it for you live at 4 p.m. Tiffany Wilding is an economist at PIMCO.
You have to believe this is the beginning of a negotiation. You know, obviously there's a lot of uncertainty around that and how ultimately that plays out. But I think we really just don't have a good sense, because we haven't seen this type of shock, in quite some time. Obviously, global markets are much different now than they were in the 1930s.
A reference to the Smoot-Hawley Tariff Act that many will tell you wound up worsening the Great Depression. Auto stocks trading mix right now. We got GM higher ahead of tariff announcements, up 1.2%. Ford down 0.5. Stellantis lower by 0.6%. Tesla today, all part of a broader tech rally, surging by 6.5%. Balance of Power continues. Back we go to Washington. Once again, your host is Joe Matthew.
All right, Charlie, great to see you. Charlie Pellet on the Tuesday edition. Yeah, it's only Tuesday. Balance of Power here on Bloomberg Radio, on the satellite radio channel 121, and YouTube. Search Bloomberg Business News Live. We'll meet you there. Keep the live stream up and running, the next 3 days? We've got special programming in place. Today, tomorrow is Liberation Day, as Donald Trump calls it. Cue the countdown clocks. It's the day before. And we don't know a lot more today than we did yesterday. If you ask anyone watching the markets like Charlie Pellet, he'll tell you that. Although we seem to be feeling good for the heck of it, it is pretty nice out after all. It's going to be nice out tomorrow in the Rose Garden as well. And on the car dealer lots. This has been an interesting part of the story. You buy a car in the last couple of days, good luck finding one depending on where you are. As we now hear more about the front loading on the consumer side, GM, Hyundai, both big jumps in auto sales ahead of this. GM deliveries up 17% first quarter, 15% gain in retail volume. Ford retail sales up. Toyota, slight growth in the first 3 months of the year because, well, God knows anything could happen. And Donald Trump reminded us of that when he appeared alongside Kid Rock in full rock regalia behind the desk in the Oval Office last night. Listen.
They're reciprocal. So whatever they charge us, we charge them, but we're being nicer than they were. The numbers will be lower than what they've been charging us, and in some cases maybe substantially lower, but we sort of have a world obligation perhaps. But we're going to be very nice. Relatively speaking, we're going to be very kind. I think they have a chance of doing better, actually, with the tariffs. It can actually help them in a certain way. And I think a lot of them will drop their tariffs.
Wait a minute. We're going to be very kind. You heard that, right? In some cases, tariffs may be substantially lower. Maybe we're in for something different here. This is curious. Laura Davison covers this all day and helps to steer our coverage in Washington as editor of Bloomberg's politics team. Great to see you. Welcome back. We have no idea what's going to happen here tomorrow. It feels like than we did yesterday. What do we know, however? There's a Rose Garden event, and it's going to start after the closing bell.
It'll start at 4 o'clock. That's the stated time. He'll come out to the Rose Garden and speak for, Trump typically speaks for 45 minutes to an hour when he comes out. He'll likely take some questions, but we don't know exactly what this will look like. How these things have played out in the past is Trump has come out, he's sort of made some big sweeping pronouncements. He's maybe gotten a little bit into the specifics, but then there's some sort of call for reporters to go and hear more about what the details are. And the thing, particularly on this one, because there could be a different rate for every country or different rates for different groups of countries. Right. People are waiting to see what is the actual paper, the plan. Something will need to hit the Federal Register to make this important. And if you don't know what the Federal Register is, consider yourself lucky. But this is basically the big book of all of the federal regulations that are coming out any single day. So all eyes are going to be on that, and that will potentially, move markets overseas and futures markets as, everyone is digesting this in real time.
So this will be interesting then. We could be in a world where we've got a news conference happening with Donald Trump. We're writing and reporting off of his words before we actually get a chance to read the executive order. Is that right?
That's very right. And that's probably why we've seen a little bit of this, of the time shift here. Of, this is going to likely be happening after markets close to potentially prevent some of these big wild swings that could be happening.
In case Trump he's misinterpreted somehow.
Misinterpreted, or, Trump is known to be, bombastic and not super precise in his language. So he could say something that ends up being not exactly what's in the actual text of the order.
What do we think we know? And by the way, you claw me back when you need to here. Reciprocal tariffs, he keeps saying that. We're going to get some form of reciprocity tomorrow. Auto tariffs, he's talked about, right? 25%. We expect that tomorrow?
We expect that tomorrow. Okay. It goes into effect. They start collecting essentially on April 3rd.
Understood. So we'll have maybe a box to check there. He's talked about a lot of other tariffs, though, as well. When it comes to different sectors, chips, for instance, is that still something that they're crafting, or will we hear about that tomorrow?
Right now, we don't believe that that's what's coming. He has indicated several times that those sectoral tariffs on pharma, on semiconductors, on copper, those are things that will be coming later. He's reiterated that he's committed to those, but that's not a this week, at least right now, not a this week plan.
What's already in effect? We need to remind ourselves and our listeners of this too. We've got China and a couple layers of China tariffs already in place.
We've got 20% on China. There was a 10% and then a second 10%. We have the 25% on Mexico and Canada with an exemption that's been in place for UMCA compliant goods.
Which is a lot of stuff.
And that's also set to expire this week as well. So that's another sort of pillar.
Tomorrow,
potentially. Again, we don't know. Wow. So there's a lot of moving pieces.
Steel and aluminum?
Steel and aluminum, that's been into effect, 25% on that.
That's already there.
And the thinking in the White House right now is that these are all going to be stacked tariffs. So if you're China and there's a 20% tariff on you already, you could be seeing yet another 20%. Or if you're South Korea, you export a lot of cars to the U.S. and that 25% auto tariff is going to hit you, you could again be seeing another percentage added on top of that. So these could be some really big swings we're seeing.
Donald Trump has talked about as well secondary tariffs, not secondary sanctions, but tariffs on Venezuelan oil and Russian oil. But those were kind of veiled threats in Truth Social posts. Does that become part of the story tomorrow?
Again, another unknown, but something to watch. That he's been very, become very fond of this phrase "secondary tariffs" as a way to sort of, punish behavior. Countries that are using Venezuelan oil. All of this is to say that nobody knows what's happening. Even at the White House, they're still debating. We could even see, Trump alluded to it in his comments earlier on Monday, that he wants to be, quote, nice. Originally, they had sort of envisioned this big plan that they would take all the tariffs that, an average rate of all the tariffs that a certain country has, look at other things like value-added taxes and digital service taxes and other trade barriers, and come up with some calculation and say, okay, for every country, here's a different number. That was going to be exceptional exceptionally difficult to do, and they're sort of at the point where they're realizing they don't really have time. So we may see a much more dialed back plan of saying, okay, certain countries are, there's just either a 10% across the board, which is what he talked about. You could see countries grouped into different, sort of what Trump views as the worst offenders to some of the countries he wants to be more friendly to. So they have a lower percentage. If you're a country that he's been more adversarial to, you get a higher number.
Well, that's really important. That's news, because we're trying to figure out what this means, right? As he just said, in some cases may be substantially lower. Is that what he's referring to? Or could that also involve maybe phone calls that are coming in from world leaders in the next 24 hours?
It could also be about those phone calls that are coming in. But Bloomberg Economics has done a ton of great work sort of parsing out sort of what these numbers could be sort of on a maximalist approach and a minimalist approach. Trump and his team are looking at those sorts of numbers and saying, okay, if we were to include all of these, we could be at 50, 60, 70%. I think they realize that there's a huge market reaction, and having numbers like in the 10 to 25% range, which is kind of where Trump has been, those are a little bit more palatable and give you a little bit more negotiating room.
Fascinating. We've heard some other possible caveats, at least suggested caveats, for instance, from automakers, low-cost auto parts. Is that something the White House is entertaining, or just part of the noise going into this?
He's certainly still taking some meetings that we reported on, and there are calls coming in, as the car dealers are reporting that, their cars are flying off the shelves, because it's not, they're able to accept, okay, if we have these import taxes on cars, we can work with that. But when it's all the low cost parts that go into all the cars that are made here, suddenly that becomes, one auto executive described it as sort of just like an industry killer.
Interesting.
And they see that as kind of the biggest pain point and sort of the most acute crisis right now.
Wow. You heard anything about the optics tomorrow? I mean, he's got Kid Rock. Did you see that outfit Kid Rock was wearing, by the way? How do I get one of those? I don't really mean that, but Donald Trump knows how to seize the show business. How does he do that tomorrow? Something he's billing as Liberation Day. Is Kid Rock going to have the band set up in the Rose Garden? What are we? Is there fireworks involved?
There will almost certainly be some amazing visual element. This is the first Rose Garden event he's done of the second term. That's almost no surprise that he is sort of saving this big grand space, which, by the way, he's remarked that he wants to pave over and have as a patio a la Mar-a-Lago. So this may be the last Rose Garden event. We'll see. But
could we show up tomorrow and it's paved like they did that overnight?
Unlikely.
This is
unlikely. But it's going to be
consider.
something. We're going to see cabinet secretaries there. This is going to be, if you are who's who in Trump world, you're going to be at this event tomorrow.
If they pave the Rose Garden, we can get the charcoal grill out there and really party a little bit. You're going to be there for this, or you're going to be here with us?
I'll be behind my terminal.
All right, fantastic. Exactly where we want Laura Davison to be. Great to have you back. Don't be a stranger, of course. Bloomberg Politics editor Laura Davison with us on the fastest show in politics as we wind up the band here the day before Liberation Day. Nathan Dean is on the way in, our senior U.S. policy analyst from Bloomberg Intelligence. His take on what happens next in reconciliation on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. Just getting word that U.S. government agencies, including the Defense and Energy Departments, have frozen several dozen research grants at Princeton University. Princeton's president says the school will cooperate with the government in combating anti-Semitism while also defending academic freedom and due process rights. Stocks higher across the board. We are seeing a rally in the world's largest tech companies as investors brush off weak economic readings to focus on prospects for interest rate cuts. Right now, we got the S&P up 33, 56.45, gain there of 0.6%. The Dow up 111, up 0.3%, and ahead of the big tariff announcement tomorrow, NASDAQ is advancing 175 points now, up by 1%. To be sure, we are seeing a rally in tech names. We've got the NASDAQ 100 index up now by about 0.8%. 10-year 4.16%, the 2-year 3.86% on the 2-year. Gold retreating from a record down 0.5%, 31.06 the ounce. West Texas Intermediate crude down 0.1%, 71.38 a barrel. Conservative media outlet Newsmax is having a meme stock moment today. Shares surging again. Right now, we are looking at an advance for Newsmax of 71.2%, building on that 735% surge yesterday in its debut session. And President Trump has signed an executive order aimed at cracking down on ticket scalping and fees that drive up the cost of attending live events for consumers. Live Nation is the world's largest ticket seller. It is the parent of Ticketmaster. Live Nation shares right now, they are trading little change, actually up by 1.2%. Again, recapping, stocks higher ahead of tariffs. S&P advancing now by 31 points, up 0.6%. Back we go to Washington. Once again, your host of Balance of Power, here he is, Joe Matthew.
All right, Charlie Pellet with the Kid Rock bump on Wall Street. It's great to see you, Charlie. Welcome to the Tuesday edition of Balance of Power here on Bloomberg Radio, satellite radio, channel 121, and on YouTube. Yeah, this day before the tariffs go into effect, it's pretty much all anyone's talking about in Washington, and for that matter, on Wall Street. It's all we've been talking about for days. We'll sit here tomorrow, right at this time, wondering exactly what President Trump is going to announce. It'll be in the Rose Garden at 4 o'clock. If it's what we're hearing, and by the way, we're hearing a lot of different things from the president himself, from his lieutenants like Scott Bessent and Howard Lutnick. But Mark Zandi says this is going to hurt. You talk about no pain, no gain. Assuming the permanent tariffs take effect in the current quarter, if Donald Trump showed up with full smash tomorrow, Liberation Day, 20% across the board, right? He's threatened it. Mark Zandi says the economy would almost immediately tumble into a recession that would last for more than a year, sending the jobless rate above 7%. Chief economist Moody's Analytics, that's his worst-case scenario. Say what you will. You can try to blow holes in that, and maybe you should. Maybe this leads to a new world order. But it could be a little bit difficult to navigate in the outset here, and certainly when the president speaks at 4 o'clock in the Rose Garden, could be a little bit difficult to actually get our arms around everything that's being announced here, unless it is just an across-the-board 20%. We're talking about dozens, if not hundreds of countries. So every day I get up out of my little desk in front of my terminal in the newsroom and I walk around the other side of the room and I see Bloomberg Intelligence. They got their row lined up. These are the sharpest men and women in the room, right? You know Nathan Dean, and he's sitting there with his headset on taking phone calls from people just like you wondering what in the world is going to happen next. The fun part about Nathan is they can ask him about anything. It's not just tariffs. It's about the reconciliation deal, the budgeting process, the debt ceiling on Capitol Hill, and so forth. That's why he is the senior U.S. policy analyst at BI. Nathan Dean, welcome back. Who's calling today?
We actually had a couple calls this morning, obviously, about tariffs. But, you know, the interesting thing is that a lot of the investors that were calling us are looking forward to tomorrow just in the form that you're going to get data and you're going to get intelligence and you potentially get some clarity. Now, I don't think it's going to be the clarity that everybody's going to say, look and see, but it's like the clarity you get when you go to the dentist and like, you know, afterwards, you feel a little bit better just because you got it over with.
Yeah, okay.
I mean, but I think what's going to happen tomorrow is you're going to see the statement of here are these tariffs. Some of them are going to go in April 3rd, but I also think you're going to see some uncertainty in terms of, okay, now that these tariffs are here, what's the negotiation ploy? How do we walk this back? Because there's this general feeling in Wall Street that President Trump's not going to do this. Well, then he does. Okay, well, if he does it, is he going to walk it back? And just remember, we're beginning to see some angst on the Senate Republican side. Tonight's vote potentially could be that. We saw President Trump just, put on Truth Social a few moments ago saying, hey, maybe potentially Senator Collins, don't vote with the Democrats tonight. So, I think you're going to get some clarity tomorrow, but not enough that you're going to feel really good going into next week, because this party is going to continue just for the next few weeks and months.
You're talking about this effort by Democrats to a legislative answer to this that Tim Kaine, the Democrat from Virginia, is pursuing. This isn't going anywhere, is it?
No, I mean, obviously, House Speaker Mike Johnson has already prohibited the ability for the House to pick up something. And then secondly, I would just say this is a resolution. I mean, this isn't really so much a piece of legislation. And, Congress delegated its authority many, many years ago to the president in terms of implementing tariffs, whether it's Section 301 or IEEPA or so forth. And then Congress isn't going to take that back. I mean, because if you get a congressionally mandated tariff, then you need a congressional mandate to undo the tariff. And presidents over the last 50 years, Congress has always felt that presidents need that flexibility.
See Kid Rock in the Oval last night?
That was a great dress. Or, sorry, a great outfit.
Yeah, my God, the colors were, I don't know who his tailor is, but shades of Elvis with Nixon. What were they trying to go for there? Do you think these guys really get along?
Oh, I think so, but I also think that President Trump needs the Rust Belt to support him through this, because the question we get from investors a lot of time is, what will it take for President Trump to pull back on these tariffs? And we've always come back with our own view is consumer confidence within the Rust Belt, because all the actions that we've seen so far on tariffs, these aren't things that, mom and pop go to grocery stores and purchase. I mean, we've talked about it on a philosophical and a theoretical exercise. When we talk about automobiles, for example, or if you talk about reciprocal tariffs on potash from Saskatchewan, farmers are going to start getting involved. The Rust Belt's going to start getting involved. And President Trump is going to need those supporters to keep the line, because I think President Trump, in his view, sees this as a long-term effort, even though there's going to be a lot of short-term gain.
It makes you wonder if Kid Rock is more the conscience of the White House than, say, Elon Musk is. But I bring up that event yesterday because of what President Trump said. Could be significantly or substantially lower. I think the word was that he used, substantially. So we're going to be kind relative to our trading partners. So is there some massive relief rally on Thursday when these tariffs don't have near the teeth that many thought?
I don't think so, because President Trump often changes his mind. First there's going to be the shock, then there is the awe, then there is the walk back. And, we even saw it over the weekend when President Trump on Air Force One said that, I'm going back to this idea of reciprocal tariffs, broad reciprocal tariffs. That's something that Washington really hadn't been thinking about, because everybody presumed there was going to be sectoral tariffs. And as long as President Trump is still thinking about tariffs, I don't think you're going to get much clarity in terms of a long-term or, say, for the next few quarters. But I will say, though, is that I think, as you move away from the tariffs into more of the Senate budget resolution or the extending of the tax cuts, there are going to be elements of that markets are going to like. And, getting two of them together, you may be able to get to a situation where you can work it out and figure out this is what the status quo will be for the next few months.
Apparently, the vote with Senator Tim Kaine of Virginia may be delayed because of what's happening on the Senate floor right now. Have you been watching Senator Booker? Cory Booker has been talking. This is a live view, right? There are a couple of senators, I guess, that are getting involved here. I don't know if you can tell us what's happening, James, but Booker's been talking for over 12 hours. I think it's over 15 or something like that. They're fooling around with the feed here. But if that goes on, the vote might not take place. Your point is it doesn't matter anyway. What is it that Wall Street is most scared of learning tomorrow?
Well, I think it's what you just alluded to earlier in terms of a broad, large tariff that potentially puts us into a recession. Because if you think about this in terms of 2025, I think a lot of Wall Street analysts and investors were anticipating getting an adrenaline shot in the arm from the tax cuts or the tax extensions. But subsequently, the tariff is potentially something that's just working to the opposite of that. And then you throw into all this idea of the deficit not being reduced and so forth. Where I'm going with here is that the one thing I think the markets really want to see tomorrow is a definitive statement. Either it's here's what the tariffs and here's what you have to deal with for the next few months, or I've decided to pull back and we're going to pause for 30 to 60 days. I think the one thing the markets will not like is if you get a situation where some tariffs go into fruition on April 3rd, some tariffs get pushed off, and President Trump essentially says to the world, we're now open for negotiation, and we go back and forth to this game of, is it sectoral, is it reciprocal, or is it not happening at all?
Do we get a vote this week on a budget resolution that might start to answer some questions on reconciliation? That's the other major story that's churning in Washington. I'm guessing your phone's ringing a fraction of the time on this, but this is important to the markets too.
Yeah, I think we do, because what we're telling our clients is just remember, this is not a legislation bill. There's no specific language in here. It's a blueprint, and it's easy to vote for a blueprint. I mean, this, you're not putting it, it's like, look, I could vote for a blueprint to lose weight, but, trying to figure out how to stop eating those cookies, that's a little bit more difficult thing. And that's where the Senate is at the moment. All they're trying to do is vote for a blueprint. They're going to fight another day. Now, obviously, the House and the Senate have to figure out their differences. We saw a lot of folks on the House side saying, look, I don't like this idea that the Senate is only pursuing a $3 billion floor. And obviously, there's not going to be, if you include things like the debt ceiling, there's a lot of differences here between the House and the Senate. But we remain committed, at least with our call, that 80% chance by the end of the year, Congress figures out a deal to keep that tax extension going. Whether it's for a couple of years or where it's longer, it's still to be determined. But we do not see taxes going up at the end of this year. We do think they'll come to an agreement.
Does the debt ceiling end up being included here, or does that have to be handled alone because this will take much longer than anyone's anticipating?
What we tell our clients is it doesn't matter to us. We think the debt ceiling is going to get raised either way. But it does matter in terms of the timing of this. We've always said that we think the tax extension bill is going to come after the August recess. But if Treasury and the Congressional Budget Office comes back and says the debt ceiling is in August and it's included, obviously that's going to push the calendar up. So if they pursue with the debt ceiling, I think President Trump can get those skeptical House Republicans on board with the debt ceiling vote. Obviously, they're not going to like it. If it's $5 trillion in extension, they're obviously not going to like that. But as we saw with the continuing resolution, President Trump, if he gets into the nitty-gritty of congressional debates, he could probably get those House skeptical Republicans on board.
This is going to end up being a much louder story in Washington, right? Standalone debt ceiling. Maybe they attach something to it, but they're going to have to get to this first.
Yeah, obviously. And look, it has to get done, or else you're going to have extreme market issues, especially in the fixed income side.
Yeah. All right. So there's Cory Booker. We found him for you. He started at 7 o'clock last night. I was way off. He's been going for like 17 hours. And I don't know if he ends up in the history books here, but he's been speaking in protest, of course, it's not just the tariffs, Donald Trump's policies up and down across the board. What do you think of this? It's like Jimmy Stewart time for Cory Booker.
I'm going to let you in on some technical analysis about right before we came on the call.
Please.
We were all looking at how amazing he looked for being up for as long as he had.
Yeah. What are they giving him?
I would be in an absolute. But, obviously, I think that Senator Booker's doing this for political reasons. He's doing this in a way to showcase to people that, look, he knows how to fight. And I think this is just something that you're going to see more and more of over the next couple of years.
Fascinating. As we watch, he's not done. I mean, we could hit 20 hours, 24 hours. What's for dinner in New Jersey? Nathan Dean, the best. Thank you, sir, as always, at Bloomberg Intelligence with our live view of the Senate floor here on YouTube. Search Bloomberg Business News Live. Meet us here for our live stream. Senator Booker just getting started, it looks like. We'll assemble our panel next. Rick and Jeannie are on the way in right here on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We are off session highs, but still holding on to a 7-point gain right now on the S&P 500 index. The Dow has turned negative since our last update. Right now, we've got the Dow down 70, drop there of 0.2%. S&P keeping it all in context, up by about 0.1%. NASDAQ, the composite index, up 93. That is a gain of 0.5%. 10-year right now 4.15%, with the 2-year 3.85%. Gold down $14 the ounce. Spot gold right now down 0.5%. 31.09, and West Texas Intermediate crude down 0.3%. WTI 71.21 a barrel. Those tariffs will be kicking in right away. We got word from the White House moments ago, with the White House spokesperson saying tariffs will go into effect right after the announcement. That announcement scheduled for the Rose Garden tomorrow, 4 p.m. Yes, going to have it for you live on Bloomberg Radio and television. A key gauge of U.S. manufacturing is signaling a downturn. And with that story, here's Bloomberg's Vinny Del Giudice.
The ISM Factory Index signaled contraction in March after starting the year on a pretty good footing. Blame U.S. tariffs. Prices accelerated sharply. Factory orders, production, and payrolls all declined. Some firms are halting investment. On the other hand, as economists often say, the S&P Global Factory Index improved a bit in late March after signaling a downturn earlier in the month. Vinny Del Giudice, Bloomberg Radio.
A move lower for airline stocks. Right now, Southwest, Delta, and American all trading lower after Jefferies downgraded their ratings amid uncertainty over consumer and corporate spending. Case in point, Southwest down 5.7%. AAL, American Airlines, down 3.4%. Delta lower now by 3.9%. And briefly, the French hotel group Accor is warning that forward bookings from Europe to the U.S. this summer are down by 25%. Accor owns the Motel 6 chain. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues right now. Long day ahead. Here he is, Joe Matthew.
All right, Charlie, you said it. We'll have special coverage of the next couple of evenings, by the way. If you're on your radio, your TV, your YouTube, you can count on us here on Balance of Power to keep you posted on the tariff news. 5 to 7 p.m. later this evening, 5 to 7 p.m. on Liberation Day. I suspect will be coinciding with an announcement in the Rose Garden that's apparently going to be happening at 4 p.m. Closing bell, we turn our attention to the White House to get a sense of what's going to happen at the next opening bell. But the Trump administration is making more news here when it comes to, I don't know if I can call them mass deportations, how about we just call them deportations, to El Salvador. A lot of controversy over the use, as we told you, of this old Alien Enemies Act a couple of weeks back. Alleged gang members put on airplanes, flown to El Salvador. A judge tried to have the plane turned around. White House kept it going. Since then, they've not been using the Alien Enemies Act. Case in point, Sunday night, 17 alleged gang members on a plane to El Salvador. 13, by the way, MS-13 and Tren de Aragua gang members, according to the Secretary of State, who called this a counterterrorism operation. That's the grounds through which they are being removed from the country. 10 Salvadorans, 7 Venezuelans previously held at Guantanamo Bay. Those sent to El Salvador on Sunday, as I read in the Washington Post, had either been convicted of or had pending charges ranging from drug possession, theft to child sex abuse, and murder, according to officials at the White House. They're trying to be more deliberate and explaining why these people are being rounded up and sent out of the country. Because we've had some cases popping up where this may not have been the case, and in some cases, worrying people here about potentially innocent people being scooped up and shipped out. According to court papers filed this weekend, one of the men accused of belonging to the Tren de Aragua gang because of his tattoos was Andre Jose Hernandez Romero, a professional makeup artist who has often worked at beauty pageants and identifies as gay. Lawyers for Mr. Hernandez Romero, as I read in the New York Times, said his tattoos included one showing a crown next to the word mom and another of a crown next to the word dad. They say these were not gang tattoos and no evidence that he's affiliated in any way. He fled Venezuela due to persecution for his political opinion. His sexual orientation, according to his lawyer, and tattoos have an obvious explanation that has nothing to do with a gang. But right now, at a pretty dangerous place in El Salvador. This case was highlighted by Joe Rogan, of all people. Of course, a major Trump supporter helped to get Donald Trump elected. And he talked about it on his program. Listen.
This is kind of crazy that could be possible. That's horrific. And that's bad for the cause. Like, the cause is, let's get the gang members out. Everybody agrees. But let's not innocent gay hairdressers get lumped up with the gangs. And then, like, how long before that guy can get out? Can we figure out how to get him out? Is there any plan in place to alert the authorities that they've made a horrible mistake and correct it?
This is not the only case that we have heard like this as we assemble our signature panel for their take on the optics, the politics behind what was thought to be a booster for Donald Trump. Promises made, right? Promises kept. But if you're losing Joe Rogan, you wonder what's happening with this program. Rick Davis is partner at Stone Court Capital, our Republican strategist. Jeannie Shanzano, our Democratic analyst, senior democracy fellow with the Center for the Study of the Presidency and Congress, both Bloomberg Politics contributors. Jeannie, we've talked before, the three of us, about targeted roundups like this. And in the case that we saw before, a lack of evidence that maybe everyone belonged on that airplane. What do isolated cases tell you like this about the veracity of the program and the way the public is going to view all of this? If you lost Joe Rogan, have you lost MAGA?
I don't know if they've lost MAGA yet, but Joe Rogan is right about this. There are several cases now that have come to light. The latest in a filing last night that you mentioned, and this was somebody who was not supposed to be deported, yet he is sent to the prison, and stunningly, we have no means by which to get him back. And that's perplexing to many people. But the reality is he is now in El Salvadorian custody, and they can do what they want with him. And this goes back to what that justice, the judge who heard the case the other day, Patricia Millett, said. She said, given the fact that you have no process by which you are determining who is a gang member and who is not, you could pick any of us off the street and throw away the key. There we go. And that's why due process matters. It does matter because people's lives are at stake, both this hairdresser now and this other gentleman that they're talking about, and who knows how many other people. There were also women who have been sent back, thankfully, who were mistakenly rounded up in some of this. So there is a process that has to occur, and if the government cannot do this properly, they are not doing their job.
Rick, there's another case here that the New York Times points out. Kilmar Armando Abrego Garcia of Maryland, now in prison in El Salvador, was in the United States legally and deported because of, quote, an administrative error, unquote, according to Trump administration officials, saying the American courts lack the jurisdiction to get him released. How many cases like this can the administration afford?
Yeah, I mean, here was a legitimate asylum seeker, running from government persecution in El Salvador, and we wrapped him up and sent him back by mistake. I mean, even Homeland Security has admitted that they should have never sent him there, but now there's nothing they can do about it. Maybe the courts can issue a request to the Salvadorans. So, look, I mean, we've talked about this before. I mean, these are very popular from a political perspective policies, right? Rounding up Salvadoran gangs, rounding up Venezuelan gangs, rounding up Mexican gangs, and sending them home, sending them to prison. The American public loves that, right? Why are they here to begin with? And so you only hurt a positive outcome when you don't use, as Jeannie says, a due process that allows you to find the mistakes. Abrego Garcia was a mistake. We've even admitted that. But there was no review. There was no due process. And so you can expect those mistakes to be made. So the idea that there's nothing we can do once he's back in El Salvador kind of betrays our standing as a leader in the hemisphere. We're the ones who've cut a deal to put all these El Salvadorans back into a big prison down there. We don't have enough leeway to get back the ones that shouldn't be there. I don't know. I mean, honestly, I think all this tends to diminish what is a popular policy, but it does bring it home to the White House on competency. We've seen over and over the firing of federal workers and then the rehiring of federal workers, policies that have been, projects that have been zeroed out that have to be put back in, pretty consistent losses at the federal level and the courts over trying to expand presidential power. At what point in time do we start talking about the competency of this administration? Is it competency or is it intentional? I think that's something that could burn a hole in their popularity, especially programs like these immigration projects.
Well, that's a really interesting way you frame that here. Jeannie, we heard from a terminal subscriber. This just popped up in front of me. When you consider what Rick just asked, how you weigh what this terminal subscriber describes as 1,000+ bad dudes gone. I don't know that that's a real number. And one guy who shouldn't have been deported. How many crimes did we save from being committed versus one who should not have been deported, Jeannie?
Yeah, I mean, the fact is we don't know. We were just talking about 2 separate cases. So already there are 2 and more reported. But the reality is we simply don't know because the means by which the government is removing people denies everybody even a scintilla of due process. And that means we are all vulnerable. All they have to do, to go back to what the judge said, is to pick us up off the street, say we're a member of a gang because of our clothing or our tattoos or whatever it is, and off we go. And in this case, we are sending these people to El Salvador, to a maximum security prison. And people should look at that video, which President Bukele proudly displays over there. These are metal bars. These are people who can't use even forks or knives to eat. 50+ men to a room who are stripped down to T-shirts and shorts, their heads shaven. And okay, if people are okay with that, in the context of somebody who is guilty of a crime, absolutely. But the problem here, as we can see and the government admits, we mistakenly picked people up and made this mistake. And unfortunately, we can't unwind it. And let's not forget, we've all been listening to Elon Musk go on Fox and everywhere else and say, mistakes will be made, but we'll correct them. The fact is, there are some mistakes you make which have huge harms on people's lives, and you can't correct them. Hopefully they can correct this one, but at this point, there is no getting this man out of custody where we sent him in exchange for millions of dollars.
Yeah, this place is a real hellhole. If you're with us on YouTube, we're showing you images from that maximum security prison, video from El Salvador where these migrants are being sent. I'll give you a swing at that, Rick, because I think it really gets to the core of what we're talking about here. Why is it important that every individual here is given due process? Why not worry about one lost if it means locking up 1,000 bad guys?
Yeah, look, I mean, I don't think it's mutually exclusive. I think we are a country of rules and laws, and we should be able to do both. We should be able to round up bad guys, know they're bad guys, have prosecuted those bad guys, and ship them out of here post haste. But we are also a country that should be able to track 1,000 people, know what their records are, and if they're clean, put them back in the home where they're married to a U.S. citizen. In the case of Abrego Garcia, has a disabled child who's an American citizen. I mean, like, we wouldn't have known that he had been picked up and delivered to El Salvador if not for his wife seeing him on a video. There was no communication to the household at all. That's not how we treat citizens of the United States. We are a very sophisticated country that ought to be able to do all these things and do them in a way that we can be proud of and not have to be embarrassed by, something that the government has done and now claims has no power to undo.
Is it a good thing, at least, Jeannie, in a remaining moment here, that the White House is no longer using the Alien Enemies Act? It's going in the direction of a counterterrorism operation. Does that become more effective?
It raises different challenges, certainly legally, but the reality is that we need to be able to give people due process. We have very few liberties protected in the original body of our Constitution. One of them is habeas corpus. Governments going back to England, way before we were founded. You don't pick people off the street, put them in jail, and throw away the key. You tell them what are the charges. You give them a chance to respond. That's how civilized countries behave. And we are civilized. To Rick's point, we can do far better. And it does matter
Jeannie
when
Shanzino
one
and Rick Davis.
people.
They'll be back with us in our second hour. We'll let you finish that thought, Jeannie, right here on Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
It's the day before, and still no clarity. Welcome to the fastest show in politics as we count down to President Trump announcing tariffs, we believe, on most imports into the U.S., so he says. But we still don't have details on this, and the market is waiting. I'm Joe Matthew alongside Kaylee Lyons in Washington, the Tuesday edition of Balance of Power here on Bloomberg TV and radio. Kaylee, Wall Street trained on the Rose Garden tomorrow, right around the time the closing bell rings, but still may not get all the info it wants.
Yeah, it's going to be a question of how specific the president gets and how much details need to be filled in after the fact. Keeping in mind that today, April 1st, happy beginning of the second quarter, by the way, was the deadline for some of his most senior trade-oriented officials to submit their reports to him. Scott Bessent, Howard Lutnick, and the USTR Jameson Greer were going to provide their recommendations today ahead of the announcement tomorrow. But President Trump told reporters in the Oval Office last night that he settled on these tariffs a long time ago. So maybe everything is already decided. We just haven't been read in yet.
With Kid Rock at his side. He suggested, though, that these tariffs would be substantially, in some cases, lower than had been expected, that we would be kind in relative terms to our trading partners, Kaylee. So maybe not the across-the-board knock in the head that some people are expecting.
Yeah, the description of it being kind and fair from the president is an interesting one. We should also keep in mind that we just had a press briefing wrapping up from the White House Press Secretary Caroline Leavitt, who, when asked when these tariffs will take effect, said it's immediately after the announcement.
That'll be April 2nd, as the president has been promising. We'll get an update for you. Jenny Welch is going to come in from our Bloomberg economics team as we start considering the impact of this announcement.
Yeah, and the impact on financial markets, of course, is included in that. And Charlie Pellet is keeping tabs on this debut of trading for the second quarter for us from New York. Hey, Charlie.
Hi, thank you very much, Kaylee and Joe. Indeed, as you point out, we don't know what, but we do know when. 4 p.m. Wall Street time. Complete coverage on Bloomberg Television and Radio. President Trump's sweeping tariffs will take immediate effect when they are announced. Again, it comes down to 4 p.m. at an event at the White House Rose Garden. Right now, we have got stocks swinging between gains and losses, at least for the Dow right now, with the S&P up 17. That is a gain of 0.3%. The Dow up 18, up just under 0.1%. NASDAQ up 135, a tech rebound up by 0.8%. 10-year, 4.16%, with a 2-year, 3.86%. Spot gold down 0.5%, 31.07 the ounce, and West Texas Intermediate crude down 0.4%, 71.19 for a barrel of WTI. Wedbush Securities analyst Dan Ives says there are no winners when it comes to President Trump's tariffs on car imports. In a note, he describes the levies as a backbreaker and Armageddon for the automotive industry. He says tariffs on those vehicles will add $100 billion in costs annually to the auto industry, which will be passed directly on to consumers and erode demand. Now, ahead of potential tariffs, we have got GM up by 0.8%, Ford down 1.1%, Stellantis down 1.5%, Tesla, all part of a broader tech rally, Tesla surging today by 6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues right now. Lots going on. Long day ahead. Back we go to Washington and your hosts Joe Matthew and Kaylee Lyons.
Oh, long days ahead, Charlie Pellet. Days plural, as we're waiting for the announcement tomorrow of these reciprocal tariffs that President Trump has long been promising. And when he has said reciprocal, he has repeatedly said that that means whatever other countries charge the United States in terms of levies on imports, the U.S. will charge them. Except the president also said last night that in some instances, what we charge them actually may be less than they charge us. This is what he said.
They're reciprocal. So whatever they charge us, we charge them, but we're being nicer than they were. The numbers will be lower than what they've been charging us, and in some cases maybe substantially lower, but we sort of have a world obligation perhaps. But we're going to be very nice. Relatively speaking, we're going to be very kind. I think they have a chance of doing better, actually, with the tariffs. It could actually help them in a certain way. And I think a lot of them will drop their tariffs.
That's where we begin our conversation with Jenny Welch, Chief Geoeconomics Analyst at Bloomberg Economics, and the perfect voice for what we're about to hear from the White House. Jenny, it all happens apparently at 4 o'clock tomorrow. Markets will just be closing. How kind do we think the president is going to be? And what do you make of these different stories? It depends on the hour, not the day, as to what we're hearing from the president.
I mean, part of this is policy process, that generally speaking, you present options to the president for him to choose from, and there's debates and deliberations with senior staff. In his case, it might not just be the people in government posts, but other stakeholders that he's talking to, and then he'll make a decision. And I think for President Trump in particular, that can be somewhat of an iterative process where it can, change as he's talking to different people and getting new information. I think also what it suggests is today those reports were due from Commerce and USTR, other government agencies advising on what the tariff rate should be. They might still be making a decision, in particular if they're thinking about tailoring tariffs to individual countries. There's a lot of questions about exactly how you would quantify non-tariff barriers, what level you would set those tariffs at, if you're factoring in conversations he's having with those countries to negotiate in advance. A lot of potential factors at play. Maybe a decision is still underway.
Well, he has 27 hours, I guess, to finalize whatever decision ultimately he wants to make before he actually addresses this subject with the American people. But the suggestion that whatever tariffs he does decide on will be less than what is charged on U.S. imports, who would that be best news for, Jenny, in terms of people who, or countries that do have high rates on U.S. imports right now that may breathe somewhat of a sigh of relief at that notion?
So part of it depends on how you're defining what they charge us, right? Is he talking about the tariff barriers in particular, in which case that's a good news for Southeast Asia, for other developing countries where those tariff gaps tend to be pretty significant. India is another example there. If he's talking about non-tariff barriers, that's a very different set of countries. That's largely the EU, for example, the VAT. Now, I think based on his other comments about the EU, he's unlikely to give them a little bit of a pass. But there are other countries that he's been talking to quite extensively. India and the UK are prime examples there, where maybe he's thinking about it from that perspective. He might also be thinking about it in terms of what they're doing outside the trade realm. So Mexico is a good example there. What have they been doing on fentanyl? What have they been doing on immigration? And then a third consideration might be, how is the stock market reacting to some of these theories that are out there, and how would reciprocal tariffs on some of our closest trade partners impact the U.S. economy?
Take us behind the scenes for a minute, realizing that Donald Trump could be operating on gut to some extent tomorrow. You talked about the reports that are due today. You worked for the Biden White House as an advisor. Is there some big room in the OEOB next door where people are out with maps and binders and they're up all night figuring this out right now? What happens in the 24 hours ahead of an announcement like this?
Yes, I think up until now, USTR Commerce and other staff have probably been working around the clock to complete these reports. I mean, I think Secretary Lutnick put it right. This is like trying to negotiate trade deals with all your major trade partners in the span of a couple of weeks. That's incredibly difficult work to be doing. I think now a lot of it is going to be the deliberations at the senior level, based on those reports, based on those policy recommendations about what they actually implement, and figuring out the rollout plan. I mean, just before coming in here, the White House announced these tariffs are going to go into effect immediately after the announcement tomorrow.
Well, and what's not immediate are still things that he's promised he might look at tariffing. Semiconductors, pharmaceutical imports. You could add lumber to this equation as well. He's talked about this notion of secondary tariffs, Jenny, beyond what he's calling Liberation Day. Just how much more liberation in his mind is he planning to bring here?
Well, and the other thing to flag that, you know, is kind of constantly the elephant in the room is China. The other major report that was delivered today was USTR's review of the Phase 1 trade deal, which probably was not very favorable for Beijing. So between that and reciprocal tariffs, we could also see an escalation of that trade war further. So yes, a number of additional tariff waves to come.
Wow.
So it's not going to be over in the Rose Garden
like
tomorrow is the moral of the story. Jenny Welch, Chief Geoeconomics Analyst at Bloomberg Economics. Thank you so much. And of course, when we consider these many different layers of tariffs we ultimately could end up with, we come back to the same question, Joe, which is what will the impact be not just on inflation, on prices, but also on growth if those higher prices make consumers balk and suddenly mean demand goes down?
Well, and that's a pretty big question when the entire sort of Trump economic approach is based on growth by way of tax cuts that, incidentally, they're going to start working on for real this week in the Senate. And it's hard to have both.
Yeah, and it certainly puts policymakers in a hard position, not just fiscal policymakers who are assessing the tax picture, but monetary policymakers as well, who have to figure out what exactly is likely to happen to the U.S. economy as a result of these tariff decisions. We actually heard from the Richmond Fed President Tom Barkin about the impact we could see it having earlier today. This is what he said.
Obviously, some amount of that will pass through into prices, and so that will be inflationary, and maybe it'll be short-term, maybe long-term, we'll see. But I'm just as interested in what's going to happen on the employment side, because if you're a company that raises prices, the demand curve would suggest your volume's going to go down. And if you're a company that can't raise prices, then your margin goes down. In either case, you're going to start working on operational efficiencies, and that means headcount.
So we want to get more on this now and turn to Liz Pancotti. She's Managing Director of Policy and Advocacy at the Groundwork Collaborative, and she's here with us in our Washington, D.C. studio. So Liz, great to have you. Welcome back to Balance of Power. We just heard Barkin there talking about really the risks to both sides of the Fed's dual mandate, that this is not just an inflation concern, but a labor market and growth-oriented concern as well. Given the limited information with which we're working right now, and hopefully we'll have more in hand tomorrow, which one of those risks do you think is greater?
I think they are both equally great, and we heard the Fed last week say everything but the S word, right? Everything but stagflation. They said they are expecting higher unemployment, slower growth, faster inflation. When you put those three things together in a mixing bowl, they usually bake up into the same thing. And so I think the Fed is taking very seriously the balance of all of these risks. But given the tool that the president is using to prod all of those things, the Fed's toolbox is limited to respond to it, and simply moving around the Fed funds rate isn't quite, the right screwdriver or whatever to deal with the ramifications of that.
Well, how much of a picture do you think the president's going to paint tomorrow, as opposed to a partial image of what's to come? Because there was great hope for a clarifying moment. I'm not sure we can find anyone who expects that.
I just heard, reporting from the White House that the press secretary said that he is crafting the perfect tariff policy, and that everything will be clear tomorrow, and that they expect certainty for markets tomorrow. It's one thing to move your announcement back to when markets close at 4 p.m. It gives you a little bit of a buffer of what markets can respond to. And so he has said that those tariffs will go into place immediately, no 24-hour, 48-hour, month-long lead time. Yeah. And so even for, the folks who have to enforce these tariffs at our ports and borders, they have to have certainty to be able to levy those tariffs. So hopefully something will be written down, but I'm not confident, given that the president has, moved from just reciprocal to 20% blanket to different policies for different countries. It's very difficult to do that in 24-hour period.
Well, and so if this is immediate, what will the impact be on businesses who have tried to, I guess, in advance import what they can, make investment decisions according to what their best anticipation of could be happening? If this is immediate, how immediate will the impact be on their actual supply chains if they haven't had a chance to fully reorient them or to stockpile enough to last them for a while?
We have seen for a couple of months that companies were expecting something on the tariff front, and so they have been stockpiling a bit. You saw that in the ISM report this morning. You saw it in durable goods a week ago. We have started to see companies, and even in their annual earnings calls, which have been going on the last few weeks, they have said we are putting orders in, trying to get ahead of these things. As you know, a month ago, he put in place the Mexico-Canada tariffs and then rolled back or paused many of those for a month. So for these companies, it's very difficult to have any sense of certainty. For most supply chains, the orders they are placing right now will likely not hit shelves for 6 to 12 months. And so I think the real question here is, when do companies start hiking prices for consumers? Is it immediate, even though those goods are not the ones being tariffed? Do they try to pad that a little bit to see if things come down? What certainty can consumers expect, I think, is a big question. But on both ends, you are seeing both in small business uncertainty and consumer confidence and sentiment, everyone is uncertain right now. Wall Street, consumers, workers, small businesses.
It's really interesting to see consumers take part in that. It's one thing for corporations to be front-loading these tariffs here, but the word we got today from General Motors, deliveries up 17% in the first quarter, 15% gain in retail volume. Ford saw retail sales rise. Toyota up from the same time over last year. People are aware of this in a way that they might not be other economic trends or stories where they want to get something done before tomorrow. How far could this go from here?
We've seen polling that about 80% of people are aware the president is doing something on tariffs, and almost all of those people are aware that it will cause prices to increase. The approval of those tariffs is very mixed. It's almost a 50-50 split as to whether people like them or not, even knowing that their prices will increase. But I think after 4 years of consumer uncertainty, what Heather Long from the Washington Post dubbed it whack-a-mole inflation of something is always popping. Consumers have become a lot more price sensitive in the last 4 years, just given various bouts of inflation, and especially now with sticky high prices. And so I think they pay attention to a lot of this stuff. The president is also out there every single day saying he will do something, not saying what he will do, but saying he will do something. tariffs have been the news du jour for almost the administration.
That would suggest, though, that we're going to have a big downturn after all of this front loading in the first quarter. What's the second half of the year going to look like on a car dealer lot?
I mean, you've already seen that ISM is saying that this is the first contraction in a number of months, 2026, I think. It is not good. I think for those car dealerships, you know, even if these things have carve-outs for North American autos or for some countries, it's not quite clear how you can even move forward, because in a month the president might do something different. I think both for consumers and businesses, it's just a difficult kind of environment to operate in and to make large decisions like buying a car, buying a house, going on vacation, even what I'm going to spend at the grocery store this week, because my utility bill could hike next week if heating oil prices go up.
Well, and I feel like I've asked this question a number of times as we've kind of been building up to tomorrow, but this notion that prices can only increase so long as consumers tolerate them, right? Companies have an ability to pass on costs until they don't. And I just wonder if they can't exercise that same kind of pricing power this time, given the kind of bad vibes we are seeing out there in the consumption economy. What does that imply for where we might see businesses actually just then trying to cut costs elsewhere in terms of hiring or even layoffs? What could this actually portend?
That not necessarily as far as going to layoffs or hiring, but in the first Trump administration, not all of the tariffs were passed through as price increases. Companies said, you know, we think we can cut a little cost here, find some pennies in the couch cushions here, lower our margins by a couple basis points here, and together, taking all of that, you know, you didn't see a one-to-one pass through.
We're talking a different scale this time, though.
More recently, both a different scale and more recently during the pandemic, during Russia, Ukraine, et cetera, companies, in fact, in many cases, passed more than their increased costs on to consumers. Consumers are extremely price sensitive. You know, we've seen expectations for jobs day on Friday that wage growth will tick down. JOLTS was a miss this morning. We are already starting to see softening in the labor market. And so if you, again, as the Fed has said, higher unemployment, higher prices, and slower growth, all taken together results in what you had in the 70s, which was the last time uncertainty was this bad.
If we get across the board tariffs tomorrow, and to your point, we don't know. We could get some form of reciprocal. We could get a lot of different forms of things. He says he'll be relatively kind. But say you get that 20% across the board that at one time was promised by this president. Is that an automatic recession, as some have predicted?
I don't know that I want to put odds on it, but I did see that, you know, Mark Zandi doubled his recession forecast this week. And that is, you know, I think for a while, I sat in this room a couple months ago after the election and said the market has priced a lot of this in. We had not seen a lot of market movement kind of in the month after the election. We are almost 100 days into this administration. Market's up a little bit today, but I suspect we won't see that for very long. Stock market, obviously not the entire story, but I think as we start to see more and more data come in on slower job growth, potentially negative jobs, slowing wage growth, higher prices, all of that taken together points to recession.
We always look forward to having you with us, Liz. Thank you so much. Liz Pencotti, Groundwork Collaborative, with us on Bloomberg TV and radio. I'm Joe Matthew alongside Kaylee Lyons in Washington as we drive forward with our signature panel next. We'll have Rick Davis and Jeannie Shanzano weigh in on this with Liberation Day, as Donald Trump would say, tomorrow, and the jobs report Friday. This is Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. Another volatile session for the U.S. stock market. The Dow back in the red, now lower by 82 points. A drop there of 0.2%. S&P 500 index is advancing up 7 now, up by about 0.1%. The S&P did wipe out a 1% slide triggered by weak manufacturing and jobs data. And we are seeing a surge in the so-called Mag 7 stocks. Right now, NASDAQ is up 98, up by about 0.6%. The NASDAQ 100 index up 0.4. Again, the Dow lower by 0.2%. 10-year yield at 4.15% with a 2-year 3.85%. Spot gold retreating from a record, down 0.4%. 31.12 the ounce on gold. West Texas Intermediate crude down 0.3%. A barrel of WTI now at 71.27, and Bitcoin is surging 3.1%, 84,944. The conservative media outlet Newsmax is having a meme stock moment with shares surging again today. Right now we have got shares of Newsmax. They are rallying now by 123.6%. That is building on the 735% surge in its debut session. And President Trump has signed an executive order aimed at cracking down on ticket scalping and fees that drive up the cost of attending live events for consumers. Live Nation is the world's largest ticket seller. It is also the parent of Ticketmaster. Live Nation shares today up by 0.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York with a look at how we're trading ahead of the big event in Washington tomorrow. The planned announcement in the Rose Garden at 4 p.m. Eastern time, after the market closed, notably, of President Trump's reciprocal tariffs that we've long been awaiting. And while that is sure to dominate a lot of the news cycle tomorrow as it is today, we also have to note that tomorrow we'll have some results in hand from a few races that could be bellwethers in terms of sentiment voters are feeling right now about President Trump and the Republican Party overall. There are 2 special House elections in Florida today, one in Matt Gaetz's district. He, of course, vacated his seat. The other in the old district of now National Security Advisor Mike Waltz, where the Republican candidate in what is a plus 30 Republican district, at least back in November, is in a pretty tight race with his Democratic challenger. And then there's also Wisconsin to consider, as there's a Supreme Court election that has drawn in tens of millions of dollars, Joe. Some of that money, actually a lot of it, coming from Elon Musk.
Yeah, we talk a lot about Liberation Day, but these are the big stories happening in politics today. These elections are happening right now, and we want to get the sense of our political panel on both of these. Rick Davis is with us, Bloomberg Politics contributor, partner at Stone Court Capital, our Republican strategist, and Democratic analyst Jeannie Shanzano, political science professor at Iona University. Great to have you both here. I'm going to start with the Wisconsin Supreme Court battle. As the Washington Post today describes it as the most expensive judicial battle in U.S. history. We've talked about this a bit. $90 million surrounding this race. Rick Davis, what makes this so expensive?
You know, it's kind of a referendum. It's a referendum on control of the Supreme Court in Wisconsin. So if Susan Crawford wins, it stays in liberal hands. If Brad Sherman wins, it becomes a better chance of becoming conservative. So there's an ideological battle in Wisconsin. Wisconsin is a key presidential primary state and a presidential electoral state. So it has great implications for the next presidential campaign. On top of all that, Elon Musk has done his best to nationalize the race and make it a referendum on Elon Musk and Donald Trump. And I make that order specifically because it's more about Elon Musk right now than Donald Trump. Donald Trump hasn't raised a finger in this state. It's really quite amazing that $90 million goes into this operation for both Republicans and Democrats, and Donald Trump's on the sidelines. But his man, Elon Musk, isn't jumping up and down with a piece of cheese on his head and spending money like it was going out of style. But it all boils down to turnout. Today's election day. Turnout's all that matters. And I would say advantage Democrats. Republicans have a much worse turnout model in Wisconsin. Their voters don't show up for these kinds of special elections. They're Trump voters, so they'll come en masse on a presidential day, but not much for midterms and special elections. So wait and see. But I would say I'd rather have the turnout of the Democratic voters than the Republicans going into an election like this.
Well, and if the Democrats do turn out and the liberal majority on the state Supreme Court, Jeannie, is retained, to Rick's point, is it Elon Musk who ultimately ends up being the fall guy for that?
You know, I think he could. By the way, happy Election Day, Kaylee. I know we're all talking about Liberation Day, but I love a good Election Day. First voting since Donald Trump got into office again. You know, I do think that he could take the heat, but I also think this is importantly tied to what we're going to see tomorrow, because imagine if the Republican loses in Wisconsin. I think they'll win, obviously, in Florida, but if they lose in Wisconsin, it's a state seat, sure, and it's on the Supreme Court. But imagine for those majority makers on the Republican side in the House. The big threat has been that if you don't go with Donald Trump, he is going to have a funded primary challenge against you. And that primary challenge funding is arguably going to come from Elon Musk. But if he's putting $20 million into a Supreme Court race in Wisconsin and he can't win that, then that may give some of those Republicans in the House a moment to say, I may go against the president and Elon Musk on something that my constituents are not in favor of. So I really think for Republicans, these elections today matter an awful lot as it pertains to Donald Trump's economic agenda. If all he can do is tariff us to death, he's got to get the other parts of his economic agenda through Congress: deregulation, energy production, and tax cuts. Otherwise, he's going to have a very unhappy base of Republicans.
Do you agree with Jeannie on that, Rick? Is it fair to call these two specials in Florida, specifically the 6th and of course, the Wisconsin Supreme Court race, proxies or tests somehow of the Trump agenda?
You know, it's tricky. I would say, again, another good example, Donald Trump really hasn't weighed in. The Republican Party hasn't spent a lot of time and money on him. Most of the activities come from outside groups. And these are Trump plus 30, as Kaylee said, districts. I mean, overwhelmingly supportive of Donald Trump. And even the most dire Republicans I've talked to said, well, a win by 10% is going to be enough to be respectable. No one's going to play the over-under, right? I mean, a win is a win, and I don't think it'll reflect significantly on the administration. Frankly, a Democratic winning in Lehigh Valley, Pennsylvania, like they did a couple weeks ago, that sends shockwaves through Republicans because Lehigh Valley is really one of the most important counties in Pennsylvania. As Lehigh goes, so does the state. And I guarantee you there are people like David McCormick and others who are sitting there going, wow, I really don't care what's happening in Florida. We're going to have 2 Republicans come out of there. But the fact that we're losing in Lehigh Valley, that is a big deal. So I think there's a lot of questions, as Jeannie said, a lot of Republicans scratching their head right now going, wow, I mean, like, am I at risk if I do support Donald Trump's agenda? And I would say one thing, just to be clear, tariffs are not popular. Cato Institute has a poll shows 75% of the people disagree with the approach on tariffs. That is not something that's going to get you reelected, even in a primary right now. So there are a lot of people walking the plank right now for this Trump agenda, and everyone's hoping right now it pans out.
Well, so when we consider the timing here, Jeannie, we know that the president has suggested the reason he's announcing reciprocal tariffs on April 2nd instead of April 1st was because he didn't want it to coincide with April Fool's Day. But is it also possible he didn't want it to coincide with these special elections?
I think that's absolutely right. It never rang true that Donald Trump was that concerned about April Fool's Day. And listen, this is going to have an impact. I don't think anybody expects Democrats to win in 6 and 1 in Florida. Those are, to Rick's point, to your point, 30, 40-point districts for Donald Trump. But you're going to make a lot of members of the GOP very nervous if this is a close victory, because don't forget, you have some Republicans sitting in districts Kamala Harris won, some Republicans sitting in much narrower districts. And so those are the people who are going to be concerned. And again, to Rick's point, the tariffs are not popular. What is popular? Deregulation, the tax cuts, all of that takes moving through Congress. And with a majority this tight, the loss of any one of these members who begins to feel the threat is not necessarily Elon Musk's money, but going with Donald Trump's agenda, that could be the death knell for Donald Trump's ability to push through his entire economic agenda. So the White House is watching this very, very carefully today.
Hey, Rick, if everyone's so confident that the Republicans will win the two specials in Florida, and we see Randy Fine expected to win by 10 or 15, depending on who you ask, albeit that's not the best performance for a district that Donald Trump won by over 30 points. But why did they have to sideline Elise Stefanik? That was said to be in part driven by concerns about Florida. When it comes down to hard math, though, these two stay Republican. Why did her career have to change, or was it about more than Florida?
Yeah, I think it's more than Florida. I mean, Florida, 2-3 weeks ago, based on what Trump's pollster Tony Fabrizio was saying, was not a sure thing. And look, it's election day, right? Nothing's sure on election day. But I would say, too, probably more to do with trying to get this agenda through Congress. They have the slimmest of margins, 2 votes. If they take any risk at any time, with one of those votes, they may not be able to get an agenda that Donald Trump has campaigned on for 4 years through this Congress. And of course, we know that the Trump folks want to push all this through in year 1 because they know next year is an election year for Congress and it's anything goes. People are going to start voting the way they need to get reelected. And so you can't count on Republicans doing what Trump wants them to do. So I think it was a smart move from the perspective of just ensuring that this congressional agenda that he's got gets the action that it needs to get.
All right, Rick Davis and Jeannie Shanzano, our signature political panel, joining us on this election day, one day ahead of Reciprocal Tariffs Day. Thank you so much. And while we're watching those stories domestically, I do want to note we just got some headlines crossing the terminal related to geopolitics. These coming after a presser between the Ukrainian President Vladimir Zelensky and the German Foreign Affairs Minister Annalena Baerbock regarding the ongoing war with Russia. President Zelensky said that Ukraine will be picking attorneys, lawyers, for talks with the U.S. in coming days, noting that NATO has not been discussed in talks around an economic deal with the United States. He also, Joe, says that Russia has halted long-range drone strikes as of today, Tuesday, and says that this coming Friday he will be discussing peace troops with allies.
That's all of it from President Zelensky, indeed. And this, of course, follows the rhetoric we heard from Donald Trump over the weekend, that he was angry. He used some other language to describe how he felt about Vladimir Putin, and maybe that's unlocking a little bit of movement here. If Russia is, in fact, halting drone strikes, it's a pretty major development in lieu of a ceasefire. Yeah, I just wonder what the would-be targets of those drones were. If this is pertaining to energy infrastructure in the Black Sea, things that both sides have been working on a temporary ceasefire on, will, of course, keep you up to date on this story. And we still have much more ahead here on Balance of Power. Robert McWhorter is going to join us on the fight between the Trump administration and the courts. That's still ahead here on Bloomberg TV and radio.
9:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow lower, the S&P, NASDAQ. They are both higher. Stocks almost wiped out gains after the White House said President Trump's sweeping tariffs will take immediate effect after they are announced tomorrow, adding to concerns about the economic impacts of a trade war. All of this expected at 4 p.m. Wall Street time in the Oval Garden. We'll have it live for you on Bloomberg. Again, the S&P now higher by 8, up 0.1%. The Dow swinging between gains and losses, down 90 now, down 0.2. We've got NASDAQ up 0.7%. The NASDAQ 100 index higher by 0.5%. 10-year at 4.15%. The 2-year 3.85%. Spot gold down $10 the ounce, $31.12. That is a drop of 0.4%. West Texas Intermediate crude oil down 0.3%, now $71.30 a barrel. And Bitcoin now higher by 3.4%, 85,206 on Bitcoin. Shake Shack shares are higher after Loop Capital Markets upgraded the burger chain stock to buy from hold, citing a recent pullback in shares, as well as potential upside to the company's earnings. Shake Shack shares, they're now higher by 2.7%. Hooters of America, the casual dining chain known for its chicken wings and server attire, has become the latest iconic restaurant brand to falter in the face of stubborn inflation and Americans' fading interest in eating out. The Chapter 11 filing follows that of seafood chain Red Lobster and TGI Fridays. Again, recapping, S&P 500 index higher by 11, gain there of 0.2%. Back we go to Washington. Balance of power continues right now. Once again, your hosts, Joe Matthew and Kaylee Lyons.
Thank you, Charlie Pellet, watching Wall Street for us every day here on the fastest show in politics. We're live in Washington alongside Kaylee Lyons. I am Joe Matthew. Ahead of Liberation Day tomorrow, we're dealing with a couple of other stories that are impacting two special congressional elections underway in Florida, a Wisconsin Supreme Court election, and an important hearing today happening on Capitol Hill. Brings us back to the Trump narrative from a different side here. We've talked a lot about President Trump's calls to impeach judges. Kaylee, we've heard as well about legislation on Capitol Hill now that might seek to codify this effort, not to impeach judges, but to limit their scope and authority.
Specifically, whether or not they can issue nationwide injunctions. This is what the act that was put forward and actually forced through a committee by Congressman Darrell Issa would do. It's the so-called rogue judges in their mind, which was actually mentioned today in the Judiciary Subcommittee, where Jim Jordan, the chair of the committee, was presiding over. He said that kind of three avenues to address judges like Judge Boasberg, who, of course, is at the center of the Venezuela alleged gang members deportation case. You either pass this bill, appeal to the Supreme Court, you have oversight, or use the power of the purse, the appropriations process, to keep the judicial branch or judges in check.
So it's a Judiciary Committee hearing underway. The legislation by Congressman Darrell Issa that Kaylee mentions is now being taken up by the House, and the Speaker got into this earlier today. Mike Johnson, listen.
We have broad scope. We have all authority over the lower courts, okay? We're not defunding courts, and we're not doing anything other than limiting in this legislation the ability of a judge to issue a nationwide injunction, because that is the problem that has gotten totally out of control. And we need this check on the judiciary, and I think we're going to prove that on the floor. One activist judge should not issue a nationwide injunction against the president's policies, and these district courts have to stay within their constitutional bounds.
So we want to get more on this and turn to Robert McWhorter. He is a constitutional lawyer and practicing criminal defense and civil rights lawyer in Maricopa County, Arizona, also founder of the law office of Robert McWhorter. Welcome back to Bloomberg TV and radio. It's good to have you, Robert. When we consider this whole notion of nationwide injunctions, obviously it is not a new thing for judges to be able to impose, though, even if the subject matter pertaining to the Trump administration is hotter than it may be in other instances. What would be lost if judges' ability to do that was taken away?
Well, good morning. Look, first of all, the people who are part of this Trump coalition had no problem at all running to district courts and getting nationwide injunctions against the Biden administration immigration policies. And you can specifically refer to Greg Abbott in Texas, who ran to one district court down in the Southern District of Texas, which was very open to these things, and they issued nationwide injunctions all the time. This is how this goes. This is not judges out of power or exercising too much power. There's a simple mechanism when there's an injunction. You ask for an emergency hearing before the Circuit Court of Appeals and ultimately possibly the U.S. Supreme Court, and you can overturn that injunction if you can ask those judges and impress upon those judges that you should have that injunction overturned. It's just the way the system works. They just don't happen to like it because Donald Trump is getting a lot of these injunctions issued because his positions are constitutionally very bad. So, you know, that's just the law, and now they're complaining about the referee. They're getting the call against him, and they're spending all the time complaining about the referee. That's all that's going on here.
Well, is the referee's life about to change here, Robert? Because it's pretty clear that impeaching judges will not be the answer. And it's interesting, Darrell Issa in this hearing had Newt Gingrich, in fact, testifying, the former speaker. They call these resolutions to impeach judges political symbols, not legislative symbols. This is legislation and could be important for judges going forward. If it passes, what will be the impact?
Yeah, you know, first of all, on the question of an impeachment, our country does not impeach judges because we don't like their rulings. That precedent was established during the impeachment trial of Samuel Chase in 1805. And even his political opponents, including Aaron Burr, voted not to convict him on articles of impeachment in the United States Senate because they believed in the principle that you do not attack judges for their rulings. You can impeach a judge if he's, for instance, taking bribes or something like that, but not for their rulings. Now, on the question of limiting a court's jurisdiction, the Constitution at the start of Article 3 says that the judicial power of the United States shall be vested in the Supreme Court and such inferior courts as Congress may from time to time ordain and establish, which means that the Congress could presumably get rid of district courts and circuit courts of appeal because they have that power. Limiting the jurisdiction is also a possibility, but that's a double-edged sword because next time when they want an injunction against a Democratic president, that power will now be gone because they've gotten rid of it. So, you know, those injunctions serve a useful purpose. What it says is, hey, put everything on hold until we have a chance to hear the merits of your case, because if we don't put it on hold, then somebody's position or somebody's interest will be destroyed by the passage of too much time and the continuing unconstitutional actions. So, yeah, I suppose that Congress could do that. They could limit the courts, but if you limit the courts, where are you going to prosecute all these people you're saying are illegal aliens, et cetera, if you don't have those courts to do it?
Well, so when we consider the courts and the people who make arguments in them, Robert, what do you consider the greater threat here in terms of the kind of narratives we are seeing? Is it around the actual judges who interpret the law and hand down decisions, or around what we're seeing when it comes to some of the highest powered law firms that are being targeted by the administration, firms that would be bringing these cases to these judges in the first place?
Well, I think it's both. I think it's what they're doing is they're trying to make a chilling effect on good district judges who are just doing their job. They're saying, we're going to make your life difficult for just doing your job. And that's not the way the Constitution is supposed to work. Regarding attacking these law firms, this is absolutely really just beyond what should be going on. This is really absurd. And all the law firms are doing, they're taking a position, that's fair enough, but they're presenting it in court. What you're basically doing by attacking these law firms is saying, we don't want you to have a lawyer so that you can have your day in court. We just want to go forward with dictatorial powers and take away all of your resources and pro bono work or even the lawyers you hire, because we're going to attack your lawyers if your lawyers dare to take a stand against our administration and our regime. That's what's going on, and that's just really scary about what this Trump administration wants to do. Once you start attacking people's lawyers, that should tell you that your legal position is bad, and you might want to think about a new legal position.
Robert McWhirter, I want to ask you about a couple of the cases that have been identified following the deportations of alleged gang members that brought us, at least in one case here, to a call for a judge to be impeached, remembering that these alleged Venezuelan gang members were put on an airplane under the Alien Enemies Act and sent out of the country. That judge that Kayleigh mentioned called for the plane to be turned around. The White House did not acknowledge that, and it went on to El Salvador. A lot of other flights have gone to El Salvador, including one on Sunday night. the administration not using the Alien Enemies Act, in fact, calling it a counterterrorism operation. Robert, 17 alleged gang members to El Salvador. They were from both El Salvador and Venezuela. And there were a couple of cases that have been called out since then. In one case, a man from Maryland who was deported, according to the administration, because of an administrative error in the U.S. legally. His name, Kilmar Armando Abrego Garcia, you might hear about him. Another professional makeup artist by the name of Andre Jose Hernandez Romero, whose lawyer says that the tattoos that were identified to be gang tattoos, in fact, were tributes to his family. He identifies as gay. Both are said to possibly be in this maximum security prison in El Salvador for no reason. Robert, what happens to them?
Well, they could be in great danger. They may have had political asylum or whatever reason. At the very least, the American taxpayers are going to be on the hook for a huge civil judgment. Once they're determined to actually have legal status or even be citizens, the American taxpayer is going to have to pay these judgments out, because this is just a total bungle on the part of the administration. And, you know, let's not forget, they don't say who these folks are. They allege they're Venezuelan gang members. They allege they're part of Tren de Agua, but they don't know. And as I've said before, you know, what's to stop this Trump regime from going in and grabbing me or you and saying to the public, we're part of Tren de Agua, and sending us down to El Salvador? I at least speak Spanish, but hey, that could be terrible. And what's the mechanism, due process rights, that we should have as American citizens, or even as undocumented persons have, to actually push back on that and say, hey, I'm not even a member of the gang, much less anything else, or should be actually deported. This is a way of handling immigration law. And by the way, now they're talking about not the Alien Enemies Act, because that's a weak ground. If you truly are a member of a gang and have a criminal past, you can be deported under the immigration statutes anyway. You put them in deportation proceedings, there's a process, and you can deport people normally. This is all for show, and a lot of people are going to be hurt and maybe killed, and the American taxpayers ultimately are going to pay out millions of dollars in judgments because of the incompetence of this administration.
Well, Robert, you alluded to there the use of the Alien Enemies Act. There's also a question around the use of the Emergency Economic Powers Act when it comes to tariffs, which was supposed to be a live issue in the Senate today. There was going to be a vote on Democratic Senator Tim Kaine of Virginia's resolution to end that emergency declaration when it comes to Canada. Due to the filibustering of Senator Cory Booker, it looks like that may be put off until tomorrow. But that aside, the fundamental question here, Robert, is whether or not this actually is authorized use of this authority for the president, these emergency economic powers, or if it is acting in defiance of the Article 1 constitutional responsibility of Congress to be the one deciding tariff policy.
Oh, I think that's absolutely the situation. It is acting in defiance. The question is whether Congress, and specifically the Republican majority, will get a backbone and start asserting their own authority and prerogatives under Article 1 of the Constitution. The Constitution was designed to have a balance of powers between the branches of government. And what has happened is parties sometimes circumvent that, but this has very much occurred here. And the Congress, under Article 1, are not exercising not only their power, their responsibility to be a check on the president. This idea of using this terrorism narrative, look, there are members of Tren de Agua that need to be deported from this country. Nobody argues that. Nobody argues about the deportation of violent criminals from this country. That's not the issue. Once you start using a terrorism designation, doesn't that kind of weaken actually fighting terrorists? I mean, let's not forget, 9/11 was a real failure of our kind of screening system in immigration law. And that's what these statutes were focused on doing. And then branching this out as a justification for terrorists to create a tariff war and expanding what you believe are your presidential powers is just not what the Constitution allows. And Congress needs to assert its own prerogatives and authority under the Constitution.
Robert, great to have you back. Robert McWhirter with us on Bloomberg TV and radio as we consider the legal side of the Trump administration right now. We'll have a lot more on this as we track the hearing, Kaylee, and wait for a ruling if this goes to the Supreme Court. Yeah. We're also counting the hours, by which Senator Cory Booker has been speaking on the Senate floor. Did we cross the 18-hour mark here?
Yeah, we're almost at 2 p.m.
Wow.
We'll cross that threshold.
senator from New Jersey, in protest of many of the Trump policies we're talking about.
Yep, he's been holding up the floor of the upper chamber since 7 p.m. last night. It's quite a marathon, depending on how much longer this goes, even as he's trading out with some of his colleagues to catch a breather. This could ultimately set a record. We'll see if he's still going by the extended late edition of Balance of Power, which will be from 5 to 7 p.m. Eastern Time tonight. We'll see you then, right here on Bloomberg TV and radio.
is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenevec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon. Yes, indeed. We are across Bloomberg platforms, and it is Tuesday, April 1st. April Fools are not exactly, because it's been pretty clear in terms of the White House and the president that, yep, tariffs, they're coming tomorrow.
Yeah, it's not an April Fool's Day thing, no. But hey, you know what? 4 o'clock tomorrow from the Rose Garden. We'll have the president's comments live as we do get them. Carol, we're already seeing a lot of news. Companies make announcements, or at least according to our reporting, make big changes potentially ahead of this announcement.
Yeah, exactly. And we've got an interesting trade because we're actually up, but call it essentially unchanged on the S&P, just up fractionally, up about 61 points on the NASDAQ 100. The Mag 7 as a whole up about 1.5%. Every name is higher, led by Tesla. So that's a little bit of your trade backdrop. We are going to talk, though, a lot about tariffs and talk about how they may be about to make history. And it also recalls and harkens back to another era in terms of history. So we're going to kind of dig into that.
I'll give one more hint. It has to do with the auto sector. Is that fair? Okay. All right. Speaking of policies out of the Trump administration, our Bloomberg exclusive on what may happen to all those U.S. chip grants, speaking of high tech.
Yeah, another issue, right? And amid all the uncertainty, we've got the 10 companies to watch for better or for worse. It's our exclusive list put together by our team here at Bloomberg. We did the research, and we're going to give you the names in just a moment.
All that and more over the next hour on Bloomberg Business Week Daily. First up, though, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
Thank you very much. And here's what's going on. We got the S&P 500 index just turning negative right now, giving up earlier gains. Got to keep in mind that at one point we did have the S&P down by 1%, but right now looking at a loss of just under 1/10% on the S&P. Key takeaway have been higher last update, but right now in the red. The S&P at 5606 down 5. The Dow declining by 167 points, down 0.4% ahead of Tariff Wednesday. We have got NASDAQ, the composite index, holding on to a gain now of 45 points, up by about 0.3%. Volatile session, NASDAQ 100 index up 0.1%. Your 10-year 4.14% with a 2-year 3.84%. Spot gold, little change, down $9 the ounce, 31.14, down by 0.3%. West Texas Intermediate crude down 0.4%, 71.22 a barrel. Bitcoin right now is advancing by 3.1%. Bitcoin at 84,985. The conservative media outlet Newsmax is having a meme stock moment today. Shares surging again. Right now, Newsmax is up by 157%, building on that 735% surge in its debut session yesterday. President Trump, meanwhile, yesterday signed an executive order that is aimed at cracking down on ticket scalping and fees that drive up the costs of attending live events for consumers. Shares of Live Nation right now, the parent of the biggest ticket seller, higher by 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, that as we see on Newsmax, which IPO'd yesterday, shares extending that 2-day gain to more than 2,000%. Yeah, it is definitely one of my gainers that I'm going to talk about a little bit later on here on this Tuesday. But nonetheless, let's get to what is certainly top of mind for investors. Really have been for a few weeks now. Tomorrow is kind of a tariff D-Day. More specifically, at around 4 p.m. Wall Street time tomorrow, that is when President Trump is expected to announce sweeping tariffs, and they will take immediate effect right after they are announced. We got that from the White House.
And as our Bloomberg colleagues write, nearly 100 years ago, the U.S. enacted a tariff law that set off a global trade war and prolonged and deepened the Great Depression. Now President Trump is betting the world has changed enough that history will not repeat itself. It is today's big take, and Bloomberg News senior economics writer Sean Donnan joins us from Bloomberg News Washington, D.C. bureau. Sean, for those who have been hiding under a rock, just remind us all what, or, you know, maybe don't actually follow the news 24/7 like we do for our jobs. They're not tuning into every single press conference. Remind us what exactly happens tomorrow and really what kicks in tomorrow.
Look, so we've been gearing up, it feels like, for almost a decade towards this moment when Donald Trump first went up or down the escalator to announce his presidential race back in 2015. He, from the very beginning, was very clear that he was going to take on trade and that tariffs were part of his tool set. And look, tomorrow is the culmination of all of that. this is going to be the biggest set of tariffs that Donald Trump has ever unveiled. We still don't know the details of them, but we do know the scale of them. These are going to be big. They're going to cover all countries, he has said. We know that there's going to be 25% tariffs on car imports that are going to take effect the day after tomorrow. We know that there's going to be more sectoral tariffs to come, and that tomorrow the big announcement is going to be what he has called reciprocal tariffs, which are meant to match all the trade barriers around the world, whether they're tariffs or taxes or regulations, with a single U.S. tariff rate. That is likely to be a fairly substantial tariff rate, could be up around 10, 15, 20%. And it's going to take us into a world that we haven't seen in almost a century, and that takes us back to 1930 and something called the Smoot-Hawley tariffs, which were, until now, the biggest act and the most infamous act of American protectionism. Well, tomorrow, Donald Trump's going to overtake those in the kind of economic history books.
Take a drink. He said Smoot-Hawley. Take a drink, Carol.
Exactly. It's a new drinking game. Hey, Sean, you also get into, though, you talk about Smoot-Hawley and how that has served as a cautionary tale about protectionism and the economic impact. What might be the economic impact of the latest tariffs that we are expecting from President Trump? And might it be different this time around? 100 years, a lot has happened.
So there's two things. One, the thing that's going to be different this time around is the scale of it, right? We do a lot more trade out of the U.S. and around the world than we did in 1930. Just to give you an idea, in 1930, U.S. imports were about 5% of GDP, and that's of a much smaller economy at the time. Now they're around 14% of GDP. So just if you whack a tariff on all the economy, on all the imports that are coming into the U.S., you are going to be hitting a bigger pie, a much, much bigger pie than you did then. But if you talk to economists and you talk to trade policy nerds and so on, and you listen to what other countries are saying, the reaction we're expecting is actually pretty similar to what we saw after Smoot-Hawley, which was immediately other countries started to retaliate. Italian auto clubs and clubs in Argentina and Brazil started boycotting American cars. That's what we're seeing now out of Canada, where we're seeing American whiskey get taken off the shelves, and we're going to see more of that to come in all likelihood. All of that means you end up with less trade, which means less demand for American goods as well as imports. You end up with higher prices, and that's why economists say we'll probably get a repeat of what we saw last time, and that is slower growth as a result of these tariffs, higher prices as a result of these tariffs. And, you know, the one saving grace perhaps is, you know, the economy is in better shape today than it was in 1930 when it was at the beginning of the Great Depression.
Just real quickly, because while we're talking economic impact or potential economic impact, there's a stat in the story in the Bloomberg Big Take that you wrote that compares it to the economic impact of the global financial crisis. Can you share that? That's a reference point that still is a major sore point, I'm sure, for many Americans.
Look, we all remember that, right? And our folks at Bloomberg Economics and my colleague Maeva Cousin, who helped write this piece, did some great work calculating how high these tariffs could go. And they came up with, if you look at all of these barriers around the world, you know, a fair number, a kind of top number to come up with would be a 28 percentage point increase, a 28% tariff, if you will, on top of what we have now. If you work out what that means for the U.S. economy, it would lead to a 4% loss of GDP over 2 to 3 years and increased prices of 2.5%. During the global financial crisis between 2007 and 2009, the economy shrank by about 6% over that period. So that's the kind of world that we're living in. If we get maximum tariffs tomorrow, we are going to be seeing a serious economic impact. And that's why people are talking now about the possibility of a U.S. recession, or at the very least some kind of stagflation going forward, why people are talking about lower corporate profits. This is a big economic shock.
And then what, though, Sean? Because I think people who could be supporting these tariffs, certainly the president and members of his cabinet, you can count them among those folks, they would say, yes, perhaps there could be some short-term pain, but ultimately we will see these industries move from overseas to the United States. What do the economists and analysts you speak to say about that?
Look, I mean, that is the promise that they're making. They're also arguing that the economy can weather this shock and that, in fact, a lot of the pain will be borne by other countries. I think what's really interesting to think about in that context is a submission that Tesla, Elon Musk's Tesla, made to a request for public comment that U.S. trade representatives put out ahead of these tariffs. And they said very simply, if you put up these tariffs, you're going to make the cost of manufacturing in the United States higher, and that is going to mean we are going to be able to make fewer cars here in the United States and export fewer cars from the United States. It's going to hurt our business. And you hear that across the manufacturing sector. You know, once you raise the cost of manufacturing in the United States, you actually make it harder to bring manufacturing jobs back. Never mind all the other potential barriers that are out there or hurdles that you have to overcome to bring factories back, and that includes labor shortages, availability of energy, availability of steel and the price of steel if you want to build those factories.
Sean, to be fair, and just to cover the flip side, just 30 seconds left here. I mean, the president has often said, he said it on most recently to NBC News, that the world has been ripping off the United States for the last 40 years and more, all we're doing is being fair. Is he right on some level? Has the U.S. been taken advantage by having such open markets and perhaps not equal access to foreign markets? And just quickly, if you could.
Look, there's a very good argument, and there's been some very good work documenting the loss of manufacturing jobs in the United States over the last 20, 30 years. There's a lot of reasons for those job losses. Trade is clearly one of them. Competition with China is clearly one of them. The question is whether tariffs are the way you solve for that problem, and a lot of economists would argue that they are not.
Listen, good stuff, as always. Sean, deep reporting on tariffs. Sean Donnan, he's Bloomberg News senior economics writer, of course, joining us from our D.C. bureau. We're going to stay on tariffs, and now we're going to go to the impact on U.S. automakers. Tim and I have talked about this a lot already. They are making a last-ditch effort to sway the Trump administration on tariffs set to take effect this week, contending that levies on the thousands of parts they source abroad could have catastrophic effects on the industry. It's a Bloomberg exclusive, so let's get to it. And back with us is Bloomberg News auto reporter Keith Naughton with us from Detroit. Keith, we have talked about this a lot with you, but what is the latest you are hearing from the U.S. automakers when it comes to tariffs and what they've been trying to get the Trump administration to do?
Yeah, so they, Carol, kind of resigned themselves to the 25% tariff on fully built cars. They figure they can work with that. Even transmissions and engines, big components. But if every single part, the thousands of parts that go into a car, is subject to a tariff, that will just break the bank for them. And it will lead to sort of catastrophic outcomes. You're going to have layoffs and plant closings. They really have been pushing hard with the administration to try and give them a break on the parts that go into the car. They'll pay the tariffs on the fully built cars, but they just don't want to be double tariffed with parts.
Is the administration been receptive to speaking to them? What does your reporting tell you?
Yeah, I mean, they're talking to the Commerce Department and the U.S. Trade Representative and the White House, and they're listening. And, you know, as the automakers themselves are saying to the administration, President Trump's goal here is to build up the U.S. auto industry. But in fact, this level of tariffing on cars, both the built cars and the parts inside them, will actually hurt the U.S. auto industry.
I am curious, you know, Keith, is the U.S. auto industry, they're beginning to think, all right, times are changing. We're going to have to really think about bringing manufacturing back. Are they maybe off the record, on the record, on the side, saying, we just got to ride this out and see what happens in 2 years maybe, or whoever is next in the White House?
I do think you're going to see some manufacturing brought back to the U.S. You already saw Hyundai announced a $21 billion effort to double its U.S. manufacturing. I think you'll see a little bit more of that. But on this parts question, a lot of these parts are very labor intensive, and they need to build them in low-cost production markets in order to make the cars affordable. So some sorts of, you know, video screens in cars, they're not built in the United States right now. They haven't been. They're built overseas. They're built in Asia. So bringing that kind of stuff to the United States would not be financially feasible, we're told.
What are the numbers that you and the team and these automakers are looking at right now in terms of how much a car will go up in price for the end consumer. And who's eating these tariffs? And is another way to ask that.
Yeah, I mean, by thousands. It differs by the automaker. GM imports more cars than Ford does, for example. But yeah, it's 5,000. We've seen one estimate up to 12,000 on an EV. These will be substantial price increases. We have news today out of our colleagues in Germany that Mercedes is just going to drop out of the low end of the market because they won't be able to make a business case for selling lower priced cars.
What about, as we look at advancements, innovation, EVs, hybrids, whatever comes next, if this is kind of the way of the road and stays with us, what might U.S. automakers potentially miss out on?
Yeah, so, they already have tens of billions of dollars invested in EV manufacturing that is not really finding a market right now. So they're already kind of behind the 8 ball on that. So they're pulling back on EVs. The rest of the world is moving forward on them, especially China. So the risk here is that technologically, the United States gets left behind.
Hey, I want to touch on another angle and another story that you wrote in recent days. It's about the folks who are rushing out to buy cars ahead of these planned tariffs. I got to tell you, my sister is one of those people. Over the weekend, she bought a Mazda so she wouldn't have to pay as much for that car as it's an import. What do we know about the other folks out there who are going and buying cars ahead of time? What do the dealerships tell you?
Yeah, we've been talking to a lot of dealers and car buyers. There is absolutely a rush on to beat the tariffs. Auto sales are just out today. GM, 17% increase in sales. Toyota up. Everybody's up today because people are flooding dealerships trying to get the prices that exist today rather than paying thousands more tomorrow once the tariffs go in place.
Have the automakers, Keith, brought in enough cars to kind of meet that demand? I mean, I'm assuming that they too have been shipping it as much as they could.
Yeah, Carol, they have built up inventory of cars. They have 60 to 90 days worth of inventory, which is more than normal. They've also, brought over parts. Ford builds engines in Windsor, Ontario. They're shipping them across the border to the United States to avoid these tariffs.
Yeah.
Hey, Keith, apart from Hyundai, do you expect to see other investments in the U.S. from companies that are building outside the U.S. right now?
I do, Tim. I think that we're going to hear more of those announcements. I think that's part of this delicate dance right now with the administration. The automakers are asking for a break on parts. The administration is saying, fine, put your money where your mouth is. What are you going to build in America for us?
Interesting. Yeah. All right. Listen, we'll all be watching tomorrow and certainly in the weeks to come. Keith, thank you so much. Keith Naughton, he is auto reporter here at Bloomberg News, joining us from Detroit, of course, as we get ready for the announcement tomorrow.
Hey, stock's down a little over an hour away from the close of equity trading today. S&P 500 down 0.3% right now. The NASDAQ pretty much flat, the Dow down 0.6%.
Yeah, definitely off our worst and best levels of the session. I look at the S&P 500, folks, most names. There's more of a negative tone, risk-off trade. About 353 names to the downside, 149 to the upside. Been tracking the Mag 7, which at one point was up about 2%. Now it's just up about just under 1%. All right, coming up, tariffs, economic slowdown, stagflation, a lot coming at investors. We've got the 10 companies to watch, for better or worse. That's next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. President Trump is planning an executive order to increase weapons exports. That's according to Reuters. Trump administration, according to Reuters, could be announcing those orders today or tomorrow. Meanwhile, a headline out of Fitch ratings. It says the U.S. housing economy growth will slow with tariffs. We've got stocks now lower across the board, completely giving up earlier gains ahead of Tariff Wednesday. The Dow, the S&P, NASDAQ, all in the red right now. Stocks fell after the White House said President Trump's sweeping tariffs will take immediate effect after they are announced tomorrow, adding to concerns about the economic impacts of a trade war. All of this scheduled to come down from the Rose Garden at 4 p.m. Wall Street time. Yes, complete coverage on Bloomberg television and radio. The S&P right now down 22, drop there of 0.4%. The S&P now at 55.89. The Dow down 257. That is a drop of 0.6%. And NASDAQ now lower by 0.1%, down 22 points. Key takeaway, the Dow, the S&P, NASDAQ, all in the red, turning lower after earlier gains. The 10-year at 4.14% with the 2-year. 3.84%. Spot gold down $8 the ounce, down 0.3%. And West Texas Intermediate crude down 0.5, 71.13 a barrel. Bitcoin now up by 2.8%, 84,726 on Bitcoin. Wedbush Securities analyst Dan Ives says there are no winners when it comes to the president's tariffs on car imports. In a note, he describes the levies as a backbreaker and Armageddon for the automotive industry. Among some of the auto stocks right now, GM down 0.1%, Ford down 2%, Stellantis, parent of Jeep and Chrysler, down 2.3%, while Tesla up by 4.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. All right, so following our list of 50 companies to watch, we talked about that back in January. Here are 10 names you should know, for better or worse, specifically for the second quarter. Bloomberg Intelligence analysts have dug into their scenarios to identify the most interesting companies, Tim, from a larger group of high-confidence focus ideas.
Biscuits, handbags, chatbots. I'm just going to say it. To share the names that made the grade with us is Tim Craighead. He's Bloomberg Intelligence Senior European Strategist. He's Director of Research Content. He joins us from London. Check out this story at Bloomberg.com/businessweek. Also, of course, on the Bloomberg terminal. First up, before we get to the handbags, the biscuits, and the chatbots, remind us how you continue to come up with the lists of stocks and companies to watch. How do you get there? What's the process?
Great to be on with you. It's all about our focus ideas. These are high conviction, fundamental calls that we think are different from what the market is thinking, discounting. And there's catalysts ahead that we think will turn the market's mindset toward ours. And in this instance, the catalyst, the triggers that we're thinking about are all coming up in the second quarter. So that's how the list comes together.
And what I have to say, we always look forward to it, Tim, because you guys really do the homework and the research. But it's not just buy this company, or not that you're saying buy or sell, but it's not like, okay, this is just all good news. You also are like, here's some concerns, and here's why this one, there might be some clouds over it.
No, absolutely. And, these are solid fundamental calls. Investors are going to make up their own mind of buying or selling. What we're looking for is where there's a disconnect in terms of what the market is thinking about relative to what we think is going on. And you're right. With this list of 10, there's 3 of them, so 30%, where we've got concerns, indeed.
So not a lot has changed, but quite a bit has changed, I'll say, in the past couple of months since you first came up with that list of 50.
What, like we've talked about tariffs or something?
Tariffs, Gen AI, DeepSeek, those sorts of things. So how did you take those things into account when coming up with this list, or even when doing the analysis that brought us these names?
Yeah, well, certainly there are some that have nothing to do with those key headlines, and we can get to those. But certainly those issues of tariffs, U.S. policies that are being put into place, as well as DeepSeek and how that's changing the tenor of AI, have fed into certain elements here. So to take the tariff issue, either one of you, certainly listeners, have shopped on Temu in the States and beyond. Ultra low priced e-commerce platform. Well, that's owned by a company called PDD. And it's Chinese. It's one of the big Chinese tech companies. And they're going to be impacted by whatever constraints continue to coalesce around tariffs. At the same time, they're also looking to expand Temu beyond the U.S., and that's a lot of money that's being spent. We think that there's margin erosion that's going to happen here. And it different, but sticking in the low-priced retail front, but brick and mortar, Dollarama is a Canadian dollar store.
Okay, this is one I've never heard of, Tim, full disclosure.
Yeah. Fair enough. Well, you're not pretty good. Well, you're one of the Americans who's not saying you're Canadian at this point, I suppose.
It's true.
So you've got Dollarama that its estimates, its earnings expectations have held up, but Dollar Tree, dollar stores, others have seen some cuts. And we think, be it with slowing wage growth, inflation picking up, issues from the standpoint of trade policies, that you're going to see estimate erosion with Dollarama. You mentioned in just a moment ago Tesla doing relatively well versus the other auto companies. It's arguably one of the best placed companies when it comes to getting through navigating the tariff issues. But beyond that, there's a new Model Y that's starting to ramp up, and you'll see sales, we think, start to accelerate through the second quarter. And nobody's paying any attention to the battery storage business that they've got, which is a really big business. We think that's going to grow into the utility space. So those all sort of revolve around the tariff issue. And not to keep going here, but AI, DeepSeek, all of that's a big focus. We have a lot of companies on the 50 to watch for the year, but teleperformance is a new idea for us. And this is a call center. This is old school, who do you get the phone call from related to whatever?
Or I hang up on? Oh, wait.
No. So this is actually one of the world's largest call centers. It's based in France. They've got operations everywhere. But we think they're going to get efficiencies from AI. Think about being a call center person and how much better you're going to be with the information that AI is going to be able to generate for you as you're making your next phone call, or the phone calls coming in from a customer service perspective. We think it's an opportunity, but yet everybody's thinking, if you look at the stock and the earnings estimates, that this company is in bad shape.
Tim, when you do these lists, you guys also get into often management change and restructuring opportunities, and you have a couple companies along those lines as well.
We do. Think along the lines of driving on your vacation as you start to think about the summer, and you're on the highway going south, and you take a break and you go to a Cracker Barrel. Have either one of you all done that?
Not in many years. I have, but not in many years.
I think I have on family trips.
It's so regional. It's so regional in the U.S., though.
Yeah,
it is. But they've suffered 3 years of earnings expectation cuts. There's not many positive opinions on Wall Street, but we see a wholesale change here. A menu revamp, services, and the way that they're dealing with their employees has been revamped. We see a revival and earnings changing. And the same thing in a very different scale could be said about Kering. This is a luxury goods company. The biggest brand that they have is Gucci. And again, they've suffered 3 years of earnings estimate cuts. And we think that with a new CEO at Gucci, a new head of design, that there's rejuvenation at the brand that's going to start to show through. And second quarter is going to be quite critical.
All right. So along with Europe, China is another stock market that's garnering a lot of attention right now. We have talked so much about Europe and opportunities versus the United States. But let's talk China. What's geared to Beijing's stimulus measures and who might benefit as a result?
Yeah, we think that this is a big deal. It's interesting. I was in our Hong Kong office back about 6 months ago, and there was a lot of discussion about ABC, anything but China. That's now shifted. I was back about 3 or 4 weeks ago, and it's still ABC, but it's like all aboard China. And, Beijing is indeed putting through more stimulus measures. They're trying to be proactive about how to deal with the tariffs. But they know they have to deal with their own problems about demographics and the policies and the property crisis. And with a lot of stimulus measures, this is now starting to show evidence of a turnaround. And with that, you've got more interest in the stock market. And the way that global investors are getting into Chinese stocks is through the Hong Kong Stock Exchange with a number of overseas programs. IPOs are starting to come back to life. We think Hong Kong Stock Exchange is going to see positive estimate revisions. At the same time, Beijing is lowering interest rates. And with lower interest rates, that can pressure earnings estimates for banks because you've got lower interest coming through. And we think that there's net interest margin or profit margin erosion that's going to hit companies like the Agricultural Bank of China, Ag Bank, along with a couple of the other big state-owned enterprise banking companies. So that's a negative, notwithstanding the positive view we have on China turning things around.
Well, on that, and these are not two names that are on this list, but Tesla is, and you spoke about that a little bit. BYD and Xiaomi. I don't know if Americans fully understand and grasp the innovations being made in the vehicles coming from those companies.
It is amazing. We did a report, and if you've got a terminal, you can find these on BI space deep, DEEP, deep dive reports, one on Made in China 2025. And what this looked at was some in-depth analysis on the industrial policy that Beijing had put in place in 2015 to drive innovation across a whole host of industries. One of those industries was autos, with a focus on moving towards electrification. And BYD is the poster child. And if you don't know, BYD actually stands for Build Your Dream. And the technology that they are now putting into their cars is second to none. And the price points are quite compelling. They just announced a charging device that or charging infrastructure that allows you to get a full charge in 5 minutes.
That's quick.
That's quicker than a gas than pumping gas in your car. It's pretty cool.
Listen, always love going through these lists with you and love when you guys have an update or a new list. We should point out, too, there's a couple of healthcare companies where innovation is the theme. And so we highly recommend everybody check out the complete story and the complete list of companies. You can read it on the Bloomberg and at Bloomberg.com/businessweek. Tim, thank you so much. So appreciate it. Tim Craighead. He's Bloomberg Intelligence Senior European Strategist, Director of Research Content, joining us from London. Coming up, some other companies we're watching. We're talking about semiconductors. This as the CHIPS Act is in limbo.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks lower across the board with the Dow, the S&P, and NASDAQ all in the red right now, with the S&P down 23, the S&P at 55.87. That is a drop of 0.4%. Dow Industrials down 282 now, lower by 0.7%. NASDAQ is down 16, a decline of 0.1%. The NASDAQ 100 index, full of big tech names, down 0.2%. 10-year at 4.15% with a 2-year 3.85%. Gold down $8 the ounce, $31.50 now on the precious metal, down 0.2%. West Texas Intermediate crude down 0.4%, $71.19 a barrel. And the surge for Bitcoin now up 3.2%, 85,088 on Bitcoin. PVH shares are higher after the owner of Calvin Klein and Tommy Hilfiger gave guidance for 2026 adjusted earnings that beat the average analyst estimate. Right now, PVH, Phillips Van Heusen, the old name for the company, now up by 17.8%. And Macy's says it hired Thomas J. Edwards, an executive from Capri Holdings, as chief financial officer and chief operating officer. Macy's shares up now by almost 2%. Recapping, a lot of red on the screen. The Dow, the S&P, NASDAQ, all lower now. S&P down 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We have a bit of a theme, certainly on this Tuesday, focusing on things that are certainly either coming from the White House or potentially. And so we want to stay with more that could come from the Trump administration, policies that may impact business, the economy, and investments in the U.S. And that brings us to another Bloomberg exclusive about how U.S. Commerce Secretary Howard Lutnick has signaled that he could withhold promised CHIPS Act grants as he pushes companies in line for federal semiconductor subsidies to substantially expand their U.S. projects. And this, Tim, is according to 8 people familiar with the matter. So we did a bunch of reporting to kind of get to the meat of this.
Okay, so for more on what that means in the chip sector, who's affected, the companies you need to watch, we head out west to San Francisco and to Bloomberg Intelligence senior semiconductor analyst Kunjan Subani, who joins us from out west. Kunjan, isn't this money already committed? Is it possible for it to be pulled at this point?
No, I can't comment more from the political perspective, but I'll comment what it means to the semiconductor companies. So when you look at the largest beneficiaries of the CHIPS Act grant, and a lot of that, mind you, is coming from the tax credit side, which is pretty straightforward. So it's not like these companies, the projects will be put on hold because of not receiving these funds on time. They've already put a lot of those projects on hold or postponed that because of the cyclical concerns that we're seeing in the market.
Well, talk to us about that. It's something we've talked about with you, with our Ian King, who covers the semiconductor space. I mean, semiconductors are cyclical, and you see these, very clear cycles of a lot of demand, people spend money to ramp up, and then oversupply, and then there's a pullback. So that's where we are right now. So it doesn't matter how much money is thrown at them. They wouldn't be building out anyway.
Exactly. Like from a shareholder perspective, and the administration came in before money was put at risk.
What's happening in Washington, and I know you can't comment on the politics of this either, how do you advise investors to understand industrial policy in the U.S. and the way it affects these companies and in a changing environment such as this?
Yeah, so if we stick to the specific CHIPS Act part of this, right, I don't think it is a huge catalyst for the top names that I listed out. Like their own dynamics, their own fundamentals should or would remain intact, irrespective of if there is a delay in receiving these funds. Because like I said, their business decisions, especially on the manufacturing CapEx spend, are being driven currently based on what the shareholders want and what the revenue trajectory demands. So this should not impact significantly in real numbers.
So one of the things I want to understand too is the U.S. Commerce Secretary wants semiconductor companies to invest more of their own money, but he's also expressed some interest in expanding a separate 25% tax credit from the CHIPS Act, according to some of those in the know. Our reporting notes that this is worth more to most companies than the direct funding awards. So, and we should point out that any major changes to the tax credit would require an act of Congress. But do you understand that, or can you help explain that?
Yeah, and look, if that comes through, that's actually the positive, though, I would say the only positive out of all these changes, because you're right, the amount of dollars, coming from that tax credit is much higher than the dollars that these companies are receiving as grant money. And the tax credits are much more simpler to execute. You spend a certain amount of dollars as per the milestones and as per the requirements, and you get the tax credit the same year. So that if they do execute on that, that would be actually a positive tailwind for all of these companies who are already capturing a lot more dollar benefit from the tax credit portion rather than the grant portion.
Hey, Kunjan, as Carol mentioned, a theme of our program today is trying to understand the way that Trump policies, specifically related to trade, will affect the companies that we talk about, the companies that our audience invests in, and the overall markets in general. From your perspective at Blue, deep into tech tomorrow from the Rose Garden when the president is expected to make this announcement. Is your world affected?
My world is divided into different end markets. Some end markets like auto seem to be greatly affected, and we will really watch for the names who serve a lot into the auto end markets, which are your analog players like Texas, NXP, onsemi, ADI. And there's also the world of AI players, right? Where currently, at least from what we have seen, tariffs are not going to be significantly impacting that world. There could be sanctions for semi companies based on, and right now the tariff impact seems to be focused a lot more on the industrial and auto exposed semi players.
All right. So one other thing we want to get to you and ask you is Intel. Intel's CEO Lip Bhutan has said it will spin off assets that aren't central to its mission and create new products, including custom semiconductors, to try to better align itself with customers. What do we know about this? Is it smart? How are you kind of reading this and what it might mean for Intel's future?
Yeah, so I'll start with the good and sort of not so good. From his keynote, there was a lot of good. One was the culture change, the entire narrative change where they're going to under-promise and over-deliver. I think that strategy aligns well with his experience with the culture shift that he's bringing. I think his experience at Cadence from being a customer service company first should align really well with their foundry business, because I think that's the part they've been missing, being a customer-focused company rather than using it for their own internal needs and driving decisions based on that. So there was a lot of good that came out of that keynote.
Yeah.
But on the not-so-good part, there were no big quantifiable targets or numbers or goals that we could take and investors can take and create actionable plans, right? So the narrative still remains the same. There's a lot of headwinds. It won't change overnight just because of a new CEO, but at least things are moving in the right direction. And as he said, we'll have to be patient with this. It's very hard to ship this large ship around. So I think the strategy and the culture shift narrative is received very positively. But like he said, we have to be really patient with this, and it will take a lot of time.
All right. Patience. I've heard that a lot with Intel. I totally get it. Hey, listen, shares of Intel are down about 4.5% today, folks. Still up about 8% on the year here in 2025. Kunjan, thank you so much. Kunjan Subani, he's Bloomberg Intelligence Senior Semiconductor Analyst, joining us there in San Francisco. When we return on Bloomberg Business Week Daily, we get a market update and some of the stocks on the move. This is Bloomberg.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, continuing to look at a trade where we are off our highs and lows of the session. What does it mean? A little bit lower on the S&P 500, down about 28 points or a decline of 0.5%. Dow Jones Industrial Average down 315 points. That's a decline of 0.75 percentage point. NASDAQ 100 down about 0.3%, down 53 points. But we've been kind of back and forth here, Tim.
Well, let's take a look at some stocks that are on the move today. With us is Bloomberg News cross-asset reporter Emily Grafeo. She joins us here in the Bloomberg Business Week studio. You don't have Newsmax on this list.
Well, we talked about it yesterday.
Okay.
Say on Newsmax.
Meme stock status, at least as of now.
Right.
We'll see what happens over the next few days.
It's only traded for 2 days.
I didn't have any fundamental developments to share.
But it was on your list
it's
in your
a
head,
meme
right?
stock. Sure. I mean, it's definitely something that's caught my eye today.
Okay.
Earnings, I think, are May 16th, so maybe we'll know a little bit more. I'm not sure if that's confirmed, but it's out there.
Then we can talk about that on May 16th.
Deal. Let's talk about stocks on the move today. Also, other stocks on the move. Johnson & Johnson's one that you're watching.
So these shares are falling the most in 5 years. And actually, the last time the stock was down this much, it was March 23rd, 2020, which was the pandemic bottom for the S&P 500.
Right.
That was right when the S&P hit its bottom, and then it moved up higher than that. So I don't know what that means for J&J, but the news is coming as the company's plan to settle thousands of talc-related lawsuits through bankruptcy was shot down in court, which means that they're now going to have to fight roughly 60,000 claims brought by people who say that the company's baby powder caused ovarian cancer and other diseases. BI says that now that number of claims could balloon to more than 90,000. So J&J had set aside about $9 billion that it had earmarked to the victims. Now Bloomberg Intelligence estimates the cost could go up to about $11 billion. So it's weighing on the stock. It's something that's weighed on the company for years now, and it's not ending anytime soon.
It's been kind of interesting to track it, right? Like how they wanted to do this, the structure of doing it was kind of interesting. Ain't over, right?
Yes, and the stock, it's about flat over the past 12 months. So I guess make of that what you will. But I'm also looking at shares of PVH.
We looked at these yesterday when the company reported earnings.
Oh, really?
Well, I always have to remind myself what this company owns.
Yeah.
The brands. I get a little confused
Don't
sometimes.
you just look in your closet?
Well,
the Calvin Klein, whatevers.
I went to the website.
The Tommy.
The website, believe it or not, is not blocked. It's not blocked here at work.
Well,
he pulled up the website. Can I just tell you?
You can tell her.
And so it's in the studio, and we have a glass wall behind us.
I'm like, this is not appropriate to be looking at on my work computer.
There was that fair amount of skin that was on the website.
You're doing research. You're doing research for your job.
I was quick to close it. I didn't want people to walk by and, see what's going on. Anyway, PVH, what's going on?
I mean, they have perfume as well, right? Or actually, I don't know if that's under the parent company. I don't know. Well, I'm not sure. The brand is.
But the stock is soaring.
The stock is soaring. Biggest jump in about 2 years. They gave guidance for 2026 that beat estimates. They also expect sales growth to be flat or slightly positive this year, which doesn't sound like that great, but it outpaced expectations. And you look at kind of the macro signals that we can get out of what the parent company of Calvin Klein and Tommy Hilfiger said. Sales were good over the holidays, started the year at a solid pace, but it's a tougher consumer backdrop in North America and a continued tough backdrop in China. Consumers are facing inflationary pressure and reporting lower confidence in their feelings about the future. This reminds me a lot about all the soft data that we're getting that shows that sentiment is down, but then you look at the stock price and company fundamentals, and
it's always like, what the expectations were too, right? Like, and if you just come in, even if it's like kind of negative or toned down, if you either come in as expected or even a little bit better, folks are like, phew.
That seems like that is exactly what happened with PVH. So that stock much higher.
Well, sometimes I walk by Carol's desk and she's just playing Roblox.
All the time.
The whole day. And I'm thinking to myself, Carol, this is not a good use of your work day.
Right. This stock is up about 4% now. I don't play. Do your children play?
No, we try to keep them away from this world.
Okay. Well,
we'll see how long we can succeed doing that. Minecraft is on our son's radar, but he's not getting anywhere close
those
to this stuff
look
anytime
kind of
soon.
similar, right?
I haven't played either.
Yeah,
of
I will
the
be
games.
honest. I get them both mixed up with one another.
What
but
is Roblox?
It's an online gaming platform. Yeah, there's 85 million daily users.
People ask if you Google, is Roblox safe for your child?
All I will say is you should read Olivia Carville's
Yes.
pieces
Yeah.
if you have questions about that.
Absolutely.
What's the stock doing?
Yeah, she's done great reporting on this company. The stock right now up about 5%. They announced a partnership with Google. So now users will be able to earn in-game perks in the game in exchange for watching an advertisement. So you watch like 30 seconds of a video and then you get the Roblox perks maybe to
I can't
buy
say anymore
other
because I'm going to
things.
get in trouble.
It seems so like post-capitalist that you're playing a game and then you're watching a video and
Talk to Carol. She does it all
earning
day.
perks for it.
All the time. No, I don't.
Such a big gamer.
Emily Grafeo, thank you so much. Really appreciate it. Bloomberg News cross-asset reporter Emily Grafeo on the day's Stock Movers. For more conversations like this, be sure to check out our new Stock Movers podcast, 5-minute episodes, the biggest winners and losers in the market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcast. Do not go anywhere. The close coming your way on TV. Tim and I continuing right here on Business Week.
This is CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Michael Wallace. The White House now says the tariffs President Trump will unveil tomorrow will take effect immediately.
President Trump is calling it Liberation Day, when reciprocal trade tariffs will go into effect. White House Press Secretary Caroline Leavitt said the message these tariffs will send is clear.
Those days of America, beginning tomorrow, being ripped off are over. American workers and businesses will be put first.
Will the president reconsider?
Certainly, the president is always up to take a phone call, always up for a good negotiation.
It's still unclear how many countries or how many product sectors will be targeted by these tariffs. Linda Kenyon, CBS News, the White House.
Georgetown law professor and trade expert Jennifer Hillman says enacting the tariffs right away could prove difficult.
The Customs Service needs to plan for what goods are they imposing tariffs on. The importers need to plan for what documentation they need to require.
Trump's new auto tariffs are set to kick in Thursday. The administration is swinging its budget-cutting axe at federal health agencies today. Reporter Sabrina Cupid is at the CDC.
In all, up to 10,000 government employees who work under the Department of Health and Human Services are expected to lose their jobs. It's part of Secretary Robert F. Kennedy Jr.'s plan to overhaul the department. It's expected that 2,400 jobs will be cut here at the CDC headquarters in Atlanta.
The Trump administration admits it deported a man who had protected status and says there's nothing the courts can do to bring him back. CBS News legal contributor Jessica Levinson.
This is kind of a nightmare scenario for most attorneys when there is some sort of clerical error with huge consequences.
A judge had granted the man protected status, ruling gangs would likely try to harm him if he were sent back to El Salvador. New Jersey Democratic Senator Cory Booker has been speaking on the Senate floor for 20 hours now to protest the Trump administration's policies. He's been reading letters from his upset constituents.
I'm going to stand as long as I can. As long as I can, I'm going to stand and read stories like this because you are seen, you are heard. Your voices are more important than any of the 100 of us.
The late South Carolina Senator Strom Thurmond holds the record for longest Senate speech, more than 24 hours in 1957. Voters in Florida are filling 2 House seats today. WFOR reporter Jim DeFeeti says the race to replace Mike Waltz, who became National Security Advisor, is surprisingly close.
These are districts that never really get much Democratic financial support, and yet because of small dollar donations around the country, in that seat in Congressional District 6, Josh Wheel versus State Senator Randy Fine, the Democrat has raised more than $10 million compared to just $1 million by Randy Fine.
This is CBS News. It's more bad news for an embattled electric vehicle maker.
Tesla sales are down for a third straight month in France and Sweden compared to a year ago. Sales dropped 36% in France in March and 63% in Sweden. The month contributes to the lowest first quarter sales in the countries for the electric car brand since 2021. Analysts say CEO Elon Musk's support of far-right parties in Europe may have hurt sales. Tesla dealerships in the U.S. and Europe have been targeted with demonstrations and vandalism in recent months. Wendy Gillette, CBS News.
For the third year in a row, Cars.com has named Tesla's Model Y the most American car. That is, the car whose parts and assembly are mostly done in the U.S. The Y is assembled in Fremont, California and Austin, Texas. The Honda Passport is the second most American car. That SUV is built in Alabama. The Volkswagen ID4 and the Tesla Model S round out the top four. Michael Wallace, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, just face it, everybody. We are everywhere. Carol Masser, Tim Stanovic, live here on Bloomberg Business Week, live in our Bloomberg Interactive Broker studio on this April's Fool's Day. But having said that, investors don't want to be fooled by maybe what comes tomorrow. They're expecting tariffs from the Trump administration, so that is certainly front and center. Having said that, stocks kind of bouncing around. We've got a bit of a mixed trade, a little bit lower on the S&P 500, down about 0.4 of a percentage point on the Dow Jones Industrial Average. Call it flat, slightly higher on the NASDAQ 100, up about 17 points. So we've been bouncing around here.
We have. We're getting some breaking news, too, as we do await the president tomorrow at 4 o'clock in the Rose Garden. We're seeing what's happening to the north of us and to the south of us. The Dow Jones reporting that Canada's Carney and Mexico's Scheinbaum held a phone call on trade today. Dow Jones also saying they discussed trade and that they discussed maintaining North American competitiveness. This according to Dow Jones. We should say the Prime Minister's office also says in a readout of the Carney-Scheinbaum call.
Yeah, so we're talking about what? The Prime Minister of Canada, the President of Mexico, Claudia Sheinbaum, holding this call on trade. This, as we are just about 24 hours away from reciprocal tariffs and other tariffs, and we'll get more clarification about exactly what's to come from the White House. But the expectations are high, and what kind of retaliation might come from some of our top trade partners. There is a cost, an economic cost. We've been talking to the economists, and we know that when you have a society and a global economy that is set with global supply chains, stuff like this is certainly going to have an impact.
Well, speaking of economic costs, are people pulling back when it comes to airlines?
Great question.
We're going to take to the skies because airlines are taking a hit today after a big downgrade. Also, Carol, it's a bird.
Yeah.
It's a plane.
Yeah.
It's a Shake Shack burger on a plane.
What? I've never had a Shake Shack burger on a plane. Have you?
I don't know if you fly Delta first class. That could be the issue.
Wow.
That could be the issue.
Dis.
Charlie thinks that's funny for some reason.
I am moving on. As we've said, we are on Tariff Watch. We're going to talk about that. And we've also got the CFO of GoDaddy. Charlie, just take it away.
All right, here's what's going on. By the way, just let me mention, we got a special 2-hour edition coming up tonight. Balance of Power. Yes, we're going to be all over this tariff story. We've got you covered here at Bloomberg. Right now, the Dow, the S&P, they're both lower. And we've got NASDAQ higher. NASDAQ holding on to a 36-point gain, up by about 0.2%. It has been a volatile session, though. The S&P right now down 8, drop there of 0.1%. Dow Industrials down 163 on the Dow, lower by 0.4%. Stocks fell after the White House said President Trump's sweeping tariffs will take immediate effect after they are announced tomorrow, adding to concerns about the economic impacts of a trade war. 10-year ahead of tariffs, 4.16%. The 2-year, 3.86%. Gold down $9 the ounce, down 0.3%, 31.14. And West Texas Intermediate crude down 0.4%. Right now, 71.18 for a barrel of WTI. Bitcoin surging 3.2%, 85,045 right now on Bitcoin. So, bottom line here, we are looking at a mixed day for the U.S. equity market. So where does it leave investors? Ann Maletti is head of active equity at Allspring Global Investments. And on surveillance this morning, she told us, despite the uncertainty, you should be sticking with a plan.
We believe investors should stay invested in equities. It's been the long-term place to be to win. So if you're going to stay, where do you want to be? And it's outside of those momentum, concentration, speculation areas.
Ann Maletti of Allspring Global. Southwest Airlines, Delta, and American all lower after Jefferies downgraded their ratings on the stocks amid uncertainty around consumer and corporate spending. Airline stocks hit hard today. Case in point, Southwest down 5.9%, American down 2.9%, and the airline with those first-class burgers, Delta, down by 3.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Do appreciate it. You're not a big plane eater anyway, Carol.
Well,
when you and I travel, I know you don't let me sit next to you, which is fine. That's like one of the rules that you have about traveling with your colleagues.
Not that I don't adore you, but it's just everybody.
You just don't want to be around me. It's fine. I get it.
You don't want to be around me either. You want your space. You do your sleep thing.
Yeah, I definitely do my sleep thing.
Consumes everything that's put down in front of him.
Not anymore. I've realized the way to feel good when you fly is to just drink water.
Yeah. I like to eat before I get on a plane.
After a few years of lots of business travel, that's what we do.
But I've gone out to dinner with you, and then you're like, I'm going to eat also what's on the plane, everything.
Yeah, fair. Guilty as charged. Hey, airline stocks, they're trading lower today, down as a group more than 5% at their lows earlier in the day. Jefferies analyst Sheila Kayalu downgraded American Airlines and Delta to hold from buy, Southwest and Air Canada from hold to underperform, saying in a research note, quote, corporate and consumer sentiment remains soft on swelling macro uncertainty.
Right. United, by the way, remained Jefferies' only buy-rated stock in the group. They did, however, lower the price target to $80 from $154.
That's a big change.
A massive haircut, even if they kept that buy rating. And do remember that it was just last month American and Delta both slashed their financial forecasts. They cited a rapid reversal of demand trends and a broad weakness in consumer spending. So we need to know more, Tim, about the group.
With a look at the group, we got Bloomberg News U.S. Airlines reporter Mary Schlangenstein in our Dallas bureau. Mary, first up on the macro, especially coming off of this Jefferies call on the group today, downgrades on American, Delta, Southwest, Air Canada, even kept its buy on United, slashing, though, its price target. We heard from the airlines earlier in the year. Why so much pessimism in the space right now?
Well, it was a real turnaround from, December, when at the end of 2024, all the airlines were talking about how great the setup was going into 2025, even though the start of the year is always traditionally the slowest quarter. But then they saw, consumers pull back on spending some. People were concerned about layoffs. People were concerned about the economy, what was going to happen. And so domestically, the airlines talked about the fact that they were seeing a drop in demand. They also said at that time that they expected it to firm up after they got through the first quarter, and they felt like spring and summer were still, in good shape.
Is the issue more on the corporate business travel side, or is it more on the consumer side?
I think the corporate side is coming into play now, particularly because there have been indications as recently as this week of other countries, hotel chains, airlines talking about a drop in demand for travel to the United States. Air Canada said they're seeing a 10% drop from a year ago for bookings April through September on trips from Canada to the U.S. And then Virgin Atlantic said it's seeing a drop in travel demand from the U.S. to the U.K. So I think there's, especially across the Atlantic, there's starting to be some real concern that, concerns about the economy, concerns about tariffs, just disappointment with the Trump administration are starting to cause businesses to rethink some of their travel.
We keep, asking these questions, Mary, of everybody when it comes to the tariffs that, if something changes either tomorrow when we get the news or next week or in a month, that's certainly, and if it changes to the better, in other words, the tariffs being pulled off and maybe sentiment changing again and becoming more optimistic, that could change things then pretty dramatically again, right, in the airline industry, possibly?
It could cause demand to pick up somewhat. At this point, the airlines are not cutting much capacity, so if that did occur, at least they'd have the aircraft and the flights to accommodate that increase in demand. But if it continues to get worse, we may start to see more trimming on capacity, and if that capacity is gone, they're not going to be able to just ramp it back up very quickly.
Just from a consumer perspective, is air travel the first thing to go if consumers feel like they're pinched?
Air travel is often the first thing to go for companies. They're often the first ones to cut travel. Now, I did talk to Connor Cunningham, an analyst at Melius Research this week, and he said that he believes that if consumers in the U.S. have already planned their summer vacations, they've already bought their tickets, they're not going to cancel. They're going to make those trips. Now, that's on a domestic trip. If you're talking about, internationally, they've got a lot more money involved, so you would think they'd be more likely to take those trips as well. But I guess it just depends on their confidence. Have they lost confidence that they can afford that big spend on a trip?
All right. Let's go.
We're going there.
We're going there.
Carol said she's never gotten Shake Shack on a flight. I told her that's because she's not flying first class Delta. I have to tell you, I'm like a big lurker on Reddit forums when it comes to air travel, Mary. And this is all over Reddit, and it has been for a few weeks, this idea that you can now get Shake Shack burgers in first class Delta. What's going on here?
Yeah, you can get them on some flights, some Delta flights in first class. They started a test earlier this year, I think just out of Boston, and they've since expanded the availability. Although it remains in first class, they don't have any plans to expand it into the coach cabin at all. They want to keep it a first class offering. It is a pre-order. If you don't pre-order it, you can't get it on the flight. They worked with Shake Shack to figure out exactly how to replicate the burgers. The only thing is they don't serve the fries. They serve a bag of chips instead of a box of fries. And what Delta told us in working on this story is if they can't be 100% sure it's going to be the best, then they don't mind not being the first. They just want to be the best.
Yeah, fries never travel well. I mean, I always feel like you got to get them fresh off the fryer for them to be well. What's interesting, Mary, in this story that you and Brooke Sutherland did, that it is so popular that burgers now account for nearly 15% of the roughly 4,500 hot meals prepped every day at Delta's Atlanta flight kitchen, and that they've had to, order a third bun toasting and buttering machine, the same ones that Shake Shack used in its restaurants to make sure it can keep up. I mean, I guess people really like it.
Yeah, the reporter that I wrote the story with did try the Shake Shack burger on a flight, and she said it tastes just like the Shake Shack burger you get on the ground. Now, American is offering sliders, and they are serving fries. They've come up with a way to heat the fries. They put them in this specially manufactured cardboard box. It's very thin cardboard. It has a coating on it, and it has holes in it so that when they heat it, it allows air to circulate, and it keeps the fries crispy. I spoke to someone who had the fries twice on American, and they said they do stay crispy. He thought they were really good.
Is this where the battle plays out, Mary, when it comes to competing among the big three, Delta, American, and United? I think a lot of people argue the idea of this hard product, like that first class seat is pretty much the same throughout these three. Yes, loyalists will push back on that, but I think it's fair to say that. So just in the last 30 seconds we have with you, is this where the battle plays out for those dollars?
I think that when it comes to food, that the vast majority of people don't travel with one airline for the food. Now, some do, but the vast majority, I don't think they do. But if they pay for a first-class ticket and the food is terrible, they're going to be pretty unhappy. So it could potentially drive away a consumer from one airline to another.
This is a great story. There's also a mention about something that did not work. I think Alaska Airlines tried to do it. All I'm going to say is it kind of turned into, at least as Mary and Brooke write, a melted mess. I'm not going to tell you what it is. You're just going to have to go to Bloomberg.com and find it out. Mary, thank you.
I could use a burger right now, just FYI.
You could always use a burger. Mary, thank you. Mary Schlangenstein, Bloomberg News U.S. Airlines reporter. All right, from planes to automobiles, we're going to go.
Tariffs. Tesla. What's going on?
Yeah, more to come.
3:21 on Wall Street. We do check markets all day long here at Bloomberg. 39 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ trading mixed right now. We got the Dow, the S&P, they are both lower. NASDAQ Composite Index is advancing 44 points up by about 0.3%. S&P lower ahead of tariffs Wednesday, 4 p.m. when we get the official announcement from the Rose Garden. Right now, the S&P is down 0.1%. The Dow down 166, down 0.4%. 10-year, 4.15% with the 2-year, 3.86%. Gold down $7 the ounce, 31.16, drop there of 0.2%. West Texas Intermediate crude oil down 0.3%. WTI 71.24 a barrel, and Bitcoin now up 3.1%, 84,965 on Bitcoin. Morgan Stanley has surpassed BTIG to become the top underwriter of global IPOs as the value of deals rose 16% year-to-date compared with the same period last year. Morgan Stanley, which does report a week from this Friday, April 11th, we've got Morgan Stanley shares down now by about 1%. Goldman Sachs' $80 million retention bonuses for the firm's two top leaders have drawn another prominent critic, with Institutional Shareholder Services urging investors to reject the awards at an annual meeting later on this month. Goldman shares up right now by 0.1%. And for our listeners in Boston, at least 2 pedestrians in critical condition after a box truck hit a downtown building. This according to Mass Live. It happened at Washington and Neyland Street. Again, recapping, S&P down by 0.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Tesla facing some challenges in Europe. I think it's fair to say globally, but just check out what our team reported last week. Sales fell for the 10th time in the last 12 months in Europe. That was where Elon Musk's politicking and a changeover of the car maker's most important product have been major hindrances. The company registered 16,888 new cars in the month of February. We don't have the March numbers yet. That's the month of February. It's down 40% from a year ago. This is according to the European Automobile Manufacturers Association. Tesla's sales plunged 43% in the first 2 months of the year, while the region saw a 31% rise in EV registration. So more people are buying EVs, but fewer people are buying Teslas.
That's amazing. That's a huge, huge drop.
So maybe it's a surprise to people listening who don't look at this market every single day, or maybe not surprising given what's happened with Tesla's stock price. Sean Tucker is probably not surprised about this. He's editor of Kelley Blue Book. It's the vehicle valuation and automotive research company. He argues that Tesla's, quote, high water mark as an automaker may be in the past. That's a hot take, Sean. Sean joins us from Washington, D.C. So, Sean, back up the claim there. Why, in your view, could Tesla's best days be behind it?
Because its peak in terms of auto sales was in February of 2023. We weren't able to call the peak at the time because we weren't sure that the decline would last. But what we see now is if you look at Teslas as a percentage of the new cars sold, in 2023, they hit 4.29%, and that's their peak. And in 2024, they were back down to 3.95. So it was already falling before this political controversy began.
Well, what is the issue? Is it political controversy, or is it the fact that this is a space that a lot of competitors have gotten involved in? And I think Americans, this is not on Americans' radar, but BYD and Xiaomi, those vehicles blow away anybody who gets behind the wheel. How big of an issue is that?
It's absolutely huge for Tesla. But for a moment, if you could, imagine if we could take Elon Musk out of consideration for this. What you would have is a company with an aging lineup. You know, the Model S, the Model X, the platform underneath those was introduced in 2012. That is ancient by auto industry standards. There's nothing new in the pipeline, at least nothing particularly high volume new in the pipeline. And sales peaked back in 2023. Then you add in the fact that they've got all of this new competition and they're not innovating anymore. I don't know that they would be doing well without the political controversy. Stack the political controversy on top of that, and you have what you see today.
Sean, I have to counter just because earlier in our last hour, we talked with a member of our Bloomberg intelligence team, our Tim Craighead, and we've got a story out in Bloomberg Business Week about the 10 companies to watch for good or bad reasons, for better, for worse. And Tesla was a company that was singled out for better. And basically what they talked about is that several positives to look forward to. Orders for Tesla's newly revamped Model Y are accelerating, notably even in China. Production rates are poised to increase quickly. Meantime, the company's battery sales to utilities, which generate higher margins than autos, appear underappreciated as a profit driver. So that's more of a corporate overview. But I am curious about, the Model Y, and I think there's also a subcompact, right, that could start in June, widening, kind of Tesla's reach and appeal. So what would you say to that?
The Model Y refresh is essentially a visual refresh. It's basically the same car underneath that it's been since about 2017. So we kind of question whether that's really going to generate much of a sales spike. Absolutely, it's their best-selling model. I believe it was one of the top 5 best-selling models in the United States last year. But I don't think there's a lot of opportunity for growth with that. And then you pile Musk's troubles on top of it, and I'd be very surprised if you see sales